Damn man. Damn man.
for the long run. I'm a slave for the cash, got snakes in the grass, no brakes on the ad, but it's all fun. We done seen it all, heard enough, give me space before I murder y'all. 10 bad bitches here, I'ma curb them all. 12 missed calls and I still made a curtain call. Here to light it up, lighten up. Hear him talking, they ain't right enough, tighten up. Everything that I came for, I left with. I don't bang sets, I just bang on the set list. Going past supper when I came for the breakfast. Put me in your prayers, I might put you on the guest list. Young niggas and we reckless. Gold in my soul, got the same on my necklace, bitch.
Yes, sir. Welcome back. Good to see you, fam. Damn, good to see you guys. Welcome back to the live streams. It's another day, another journey, another grind. Midsummer, it's absolutely high in summer right now. Everyone is chilling on the beach. But you guys are still here. You guys are still here conquering the trading industry. All right? That's how it goes. We have CPI coming tomorrow. This is all the preparation for tomorrow, for the CPI tomorrow. We have Uncle Jerome speaking one more time. Let's see what he says today. If something today will be a little bit more interesting than tomorrow. Yesterday was chop. Today is a little bit more, trending. Looking forward to see you guys today, killing it together here. London session was great with the fam. We have been streaming already for like 4 hours. In London, I took a 1 hour break and now we're here for New York. So, a random applause for myself, for yourself. And, yeah. Let's get the party started. Sounds good? Perfect. All right. As always, yeah, thank you for the love. Thank you for the support. Thank you for being professional in the chat. We have the best chat, man. I love the professionalism in the chat. I mean, I don't see any more buy and sell guys anymore. That's good. Not too much. It's getting good. It's getting good. All right. Beautiful. That's what we're heading into. All right. Beautiful stuff. Let's see what we have with us today. As always, let me quickly scroll through the chat real quick before we do our, analysis, our overall overview in regards to the dollar. The dollar is definitely not looking that strong today. At least not now. They're in New York. It's gonna be interesting though, right? 10-year yield pushing up a little bit. A lot of things to discuss. So let's check it out. Make sure you smash the like button. Almost 200 likes. That's good. That's a good start. That's a good start. Candle Slinger, my man, Bonnet, Ramosa, Jonathan. I'm doing good, man. How are you, bro? Ratnik. Good to see you, my friend. All right. Too Wavy. Balen. Maria. Yeah. We like Maria. You know why? Because she's always here. She's always here supporting the fam. That's Maria in a nutshell for you. Right there. Jolene. Same thing. Same thing. Albert. Good to see you, man. My man Patrick. Ankit. Elena. Swan. Yeah, man. Love it, Giz. Let's go. Our journey to the 100K. Our journey towards more success together. Day in, day out. Till the morning, till the evening. We're here. We're doing something to help you become a better trader. And I hope you learn something. That's my goal. That's my mission. I hope you learn something. And if you don't learn something, maybe I can learn something from you. That would be nice as well. We're here to learn. We're here to stay open-minded. Okay? That's what we're here for. All right. Let's make it happen. Let's get into our overall content as well as our Discord real quick. We have a couple things to share. I want to do a big shout out to Mike. Mike has been doing extremely well. Shout out to Big Mike. We call him the Mastermind Mike. All right. Shout out to you, man. Appreciate that. Putting in the work, putting the effort, putting your analysis as well as catching up with it. Really, really nice, bro. Keep it up, man. Keep it up. Okay. Also going back into the LTA wins. I mean, the trading floor is packed. Absolutely packed. Beautiful to see that. And then, of course, the LTA win section right here. We have Gilbert. He says, hello, I hope everyone is doing well. I really appreciate the community and what Lorenzo Corrado and Gavin Dantas has been building or has given us the opportunity to learn. I have not been able to be here because of the summer. But I want to give a summary of the first 2-3 months. I have learned more about trading than I would do anywhere in such a short period of time. Beautiful. The first month, learn to be more patient. Use other confluence to convert both trends and potential trade setups. So many great confluences and so on and so on. For me, the most important thing is to have fun with whatever you do. LTA has truly made it fun to trade for me as one of my hobbies. So let's see. Woo! Looking good, G. Keep it up. Keep it up. Keep it up. That's some banger stuff right there. And staying consistent as well. Shout out to Gilbert, man. Our community is on fire. This is where I'm streaming for. I'm streaming for the guys that are here, that are serious. And then I want to take things to the next level and are patient enough to understand that it's a process, okay? And are not hesitant if things are going wrong, that they're gonna cry. And, it's so bad, trading is so bad, and maybe it's not for me. Just keep the process up, my friend. And Gilbert, you're a prime example. So shout out to you. Fantastic stuff. Okay, talking about gold. All right, gold is pushing hard. Suddenly, let's say around about, we started to come up around 7. We started to really follow through here. All right, there were a couple of levels initially where we were looking for, and I'm happy that I didn't take that short play because I was looking at shorts before with the community. But we said like, I'm not taking it myself. It's time to wait first for New York to open up. And what did New York do? New York smashed through all these zones right away and is pushing up further while the dollar is breaking down. Okay, so gold is pushing up, dollar is breaking down at this particular moment. Let's go to our summary real quick. Okay, market great. Asia was overall bullish. London initial consolidation. Now we're pushing into further continuation. Okay, the daily and weekly obviously are bullish here. All right, weekly time frame, I would say looks bullish to me. I mean, we're still pushing back down, but we had not, we didn't have a top wick on the weekly candle. So, we're flipping here potentially. We're flipping this weekly candle. And I think this is where we're kind of trying to get into, potentially look at a flip. So the weekly looks good. Daily looks bullish as well. That follow through, that push up right now is kind of interesting as well here. I would not be surprised if we're going to potentially go for the weekly highs based upon the higher time frame. Just, understanding the structure initially, taking out the lows, pulling back a little bit and trying to go again at it. Okay, that's kind of what you're seeing right now, which is actually the opening price of the week. And the opening price of the week is at 22.80, 23.89. All right. So on many brokers, there is no top wick set on the weekly candle. And that means that if they want to set in a top wick, then we have to push up further to at least come back towards that zone, that target at 23.89. I do see that as a serious target to definitely take in consideration, potentially pushing into that zone. However, what I said was gold is setting up in preparation for the CPI. We have been developing an upsloping bullish trend starting at June 26th. It's kind of what you can see here right now at the moment, right? We have been holding up. Yesterday even we tapped into it and we came up again. Very choppy day yesterday, of course, during Jerome Powell's, his interview, right? Very, very choppy overall. But eventually we did came back into the range. We closed into the range. And today Asia was just the expansion. One straight up expansion into continuation again, leaving yesterday's daily range. Okay, so therefore I was initially saying, okay, if we get rejected 23.74, I will start looking for continuation long buys in the previous daily range. But instead of doing that, we actually came down. We actually shot up without coming down towards these 23.65 levels. A couple of interesting levels that we had there. And we drove, straight through these levels initially. So we broke through all the resistance there. Okay. So at this particular moment, you can see that right now we are pushing up further. So we might flip this into support. The 2373.8 is definitely a level to look for or to take in consideration. Now, what's happening on the lower time frames? The lower time frames are showing us just constant push behavior. Okay, and I think that this is kind of what we're targeting, the target that we're looking for. All right, is that possible? Yes or no? That's the question. Are we going to be able to get towards the Sunday open today, or is this going to be potentially a break below the early previous daily PVC again and looking for further pullback? Is this going to be the resistance? And then are we going to turn around here? I'm leaning towards longs still. Okay, so I said if price closes 1 or 4 hour candle above the 23.73, long continuation plays. Well, we clearly have seen that happening right now at the moment. At least this 1 hour candle closed severely above that 23.73 level. So right now, we're kind of, holding above the 23.78. That's a kind of a local support that you're forming. But at the same time, we also had a very aggressive expansion up without any pullback right when the hourly candle closed at 7 o'clock. So, or at 6 o'clock, sorry, leading into 7. So do take that in consideration. It was a very aggressive expansion. At this particular moment, the best thing to do and the beautiful thing about today is that gold and the dollar are pretty nicely correlated with each other here. So when the dollar was coming down, gold was indeed pushing up. When the dollar was pushing up, gold had a hard time. It started to struggle with breaking out further. So therefore, if the dollar continues to drop here and the follows up really nicely as well with the dollar. I do believe you have a really nice confirmation to look for continuation longs. If you do break below the early previous daily PVC, you know, I kind of look at it more in this way, where you just consolidate here, you aggressively expand and you reverse. Yeah, if that's the case, then you start coming back down towards the previous daily range. And that's what you, what you don't want, if that's the case. But you will find trade setups regardless if that's the case as well here. But the ideal for me would be if we will pull back into any of our key levels, in particular the range itself, and hold support there. All right, that would be the best case for me personally, to look for that range. Now there is a level in between, and that is of course the 2378. Okay, it's a level we just cannot ignore based upon that rejection. All right, 2377 is kind of your level as well to look at when you pull back. Maybe you're gonna hold here. Maybe there is a potential chance that you drive further and you just use your early previous daily PVC as your stop loss, below the lows to target the Sunday open here. Okay, so for now we're in the middle of an expansion. We need to wait for price to chill, to come down, or to just continue its momentum to one of our next levels. But for now, I do believe that the moment of a retracement might be possible. We might be looking for somewhat of a retracement here. The yield is already pushing back up, and the dollar is also holding up still at this particular moment. So yeah, let's see how this one goes here. All right. During London, there were only a couple of sellers that we looked for. Overall, gold dollar was pretty rangy, but you could see how both the previous daily PVC and the previous daily very high were holding up very well, right? This is all from the previous daily range. You draw the volume profile, you get your analysis, you get these three levels allocated to you, right? 1, 2, and 3. And the moment it tapped into this one, got rejected. The moment it tapped into this one, at the previous daily PVC, got rejected. So, it's holding really nicely around these levels, but it will also give you an indication of, now we have been broken out. If this was just a fake move on the 4-hour time frame, right? A bearish flip for the dollar, leading into continuation towards the downside, or if this would be a reclaim, and if price would come up one more time, this is what you potentially could see here. But again, bullish on gold, man. Bullish on gold. The fact that you started to move up at 7, an hour before the New York Open, is always interesting. Okay, but I would pay very close attention towards your next levels, your next particular levels here. And even if you shoot up too much towards the Sunday Open, yeah, then also pay very close attention. If you want to look for long setups, don't long, in my opinion, on in the middle of an expansion. Wait for a slight pullback. Wait for your opportunities, be patient, and then see if you can look for continuation plays. That will be the ideal. Okay. Friday, value highs, resistance, strong resistance. Yeah. Which one is that? This one right here, you mean? Okay. Yeah, you have this one right there. Yeah, indeed. Yeah, you're gonna face some resistance there at the moment. We can look at it. We can use it as well if you want to, and see what the reaction is from there. But for now, what needs to happen is that we need to start pulling back a little bit, in my opinion. That's something to do. If you start coming up further, then I don't want to enter in the middle of an expansion for no reason, right? Where I'm gonna put my stop loss above the 1-minute low. I'm not really a big fan of putting my stop losses below 1-minute lows. If I'm gonna enter longs, then I'd rather wait for somewhat of a reversal play now, and just take a reversal trade short term to see if you can take it back, to see if you can continue up, if that's the case here. But we're holding up very strong, so the idea would be you pull back, you swipe the lows, and you continue to drive higher. That would be the best case scenario. So yeah, that means that you come down, you take out the lows, or you swipe the lows, and you continue to drive further. But again, do you want to really leave this behind then, that pullback? I mean, it's a pretty big move, right? So this is already like 75 pips. So this is kind of like the scenario here. And yeah, that's something that we have to pay very close attention to right now. All right. Gold has been doing gold things. Yeah, during the New York session. And especially last week was the RFP week. This week is the CPI week. And you can tell, you can see that the price is just, you know, all in preparation just for new setups, news releases, or it moves before New York. So when it's New York session and we stream at a fixed time and we are already in the middle of an expansion, we just have to be patient. That's what it is. Wouldn't be catching a pullback, a highly probable trade potentially. Yeah, potentially looking interesting at this level already. We're now already there. So how many early previous day value we got there? We got the one from Monday and we got the one from Friday. Yeah, and the beautiful thing is between those levels, there is still quite enough room here. So this is like 50 pips. This is like 70, right? This is like 75, something like that. So there's enough room between. What about London, Lorenzo? What did you do? We just chill. We just had, you know, we looked at the dollar behavior. We saw one setup play out for the Euro USD. That was pretty clean overall. The Euro USD was pretty nice and the dollar was pretty nice. Both of them gave the confirmation from my key level. So that was pretty good. Gold was just ranging. Nothing for gold during London either, because gold was just holding back below these levels. Okay. And yeah. That was indeed the London session. We looked at a couple other things, the Australian dollar against US dollar, GU as well, practically all the dollar pairs today. That's kind of what we're looking out for. The dollar pairs, and we were paying attention a little bit to gold. But gold was just holding up, ranging during that London session right here in this particular month. So from like 3, the London Open till, yeah, pre-New York, we were in that range. Badass Trader, my man, good to see you again. Hope you're doing well, my friend. What happened to those shorts? Did you take them? No. No, we said we're gonna wait for New York. It's not worth it to take them. There's no follow through. There is no volume for gold. Gold was just holding up in a range itself. So we took the Euro USD. Are we live every day or just on news days? We're live every day. Just trading gold on stream. On Discord, we trade practically everything. What do you think of GU? GU has been coming up, right? We covered GU a lot today. We covered GU a lot. GU was looking initially quite weak. We came back above the opening price, above the Sunday open, and we started to continue to drive up. So yeah, with the weak dollar, I remain bullish now. That's it. As long as the dollar stays below this level, I remain bullish for GU. That's it. Of course, we're facing that resistance now here. So yeah, we looked at the opening price. You now have this resistance, okay? But there is definitely a chance that if we pull back into the Sunday open, that we might hold here. It depends on what the dollar does. But if we pull back based upon this rejection short term, we might build enough to just start pushing further up. And if that's the case, you're gonna see that breakout. And yeah, if the dollar starts tanking, the GU will take out the highs. That's, I don't think, something that will be that difficult here with the dollar breaking down from now. You can see clearly that the dollar is getting rejected. All right, this is only gonna benefit GU. This is also gonna benefit EU. This is gonna benefit AU. This is gonna benefit practically all the pairs. So the question is, which one of these is stronger? Well, then you can go to the like the Euro GBP or the GBP against the Australian dollar. You can just start looking at these type of pair setups in order for you to further look, okay, and see what you can do there. All right. So far, GU looks good if the dollar decides to stay below this level. So if the dollar really, doesn't break the 104.6, I remain more bullish on these ones right here. All right? Absolutely. How do you try versus I'm long on gold? Nice. Where did you enter? What time did you enter? And where is your stop loss? Let me know. So gold has a hard time breaking the 2381. All right, so we are facing that resistance from this next range, which is kind of the top of the range right here. Okay. We really have to start taking it to the lower time frame today. I think during the CPI as well, we're going to see the same thing happening. At least in preparation for the CPI. We have the speech again in an hour, right? Yeah. Sorry for the spam, Lorenzo. I'm curious about what Lorenzo thinks about that scenario. So ask him one more time. Hopefully sees it. Which one, my friend? Which one? Let's talk about it. Do you not think that could be scenario gold just consolidates between the two early PV daily very high levels with no retracement back? It could be if you start coming up here, but you never know when price starts consolidating and ranging. We've been consolidating for a while here, right? Same as here, same as here. We're pushing up here. At this particular moment, that's just the case. But for now, we're getting into our next level. If you start breaking below here, and we close below the structure overall on the lower time frame, I might look at a short bounce here. That's it. A short pullback already for gold. Swan says, really hoping gold stays at 2380 up to 2385 to withhold any news wick on the CPI. Yeah. Yeah, I mean, the higher we go, I mean, the better it's gonna be. Based upon the fundamentals, indeed, we're extremely bullish. Everyone was talking about the head and shoulders pattern on the higher time frame, and then price shoots up again. Now, could it still play? It could be. If you don't break these highs, you're unable to break the highs, you start to roll over. Who knows? But you know, we released that fundamental report about gold, which is what, like 64 pages. And practically, you know, there's so many variants laying and telling you that it's just looking very bullish. But the most important data, which will come out at the end of this month, the 31st of July. Is it the 31st or 30th? I think, no, the 31st of July. Wednesday, the 31st of July, we're going to see a new report coming out for gold, which shows you the supply and demand data. If that data comes out, I'm going to be gonna pay very close attention to the higher time for gold, because we've seen in the last 3 quarters that when that report came out, a serious move in the month after. So that means August in this case would cause potentially a bigger break for gold, instead of, you know, being stuck in that consolidation range, at least in the higher time frame. So yeah, that's around like, what, 20 days left. So anyways, that's far away. And then it will take some time for that to develop as well. So what are you going to find in that data? Well, the supply and demand data will give you literally the supply and demand, right? The manufacturing information, the gold recycling information, the central bank purchases, the you know, investment purchases or sellings. So all of that will become public, as it will be noted once every quarter. And it always comes later, right? So in case the end of July hits, it's gonna be Q2 information. So there's always a lagging period. Youth is holding up. If you're gonna see this breakdown, I think Sunday Open will be very easy to reach for gold. But if we're gonna hold support here, and we might be hovering around, we saw that little bit of a pump here, a little bit. Of course, we're in a big range. All right, 15-minute range right now. We're gonna potentially, I think, break out once the CPI comes out. I think that is what will happen here. It's just we're gonna start consolidating. But even at consolidation will have an impact on the potential gold price here. So anyways. So what are you interested in? Well, if we start getting rejected here, fam, then I'm actually interested in like looking for potential, sell stops, right? Entry model 1. So this would be like an entry model 1 play right here. Entry model 1 based upon that rejection, pulling back and then looking for potential bullish continuation. Who knows what will happen here? If we can hold up in this overall trend, we haven't seen that expansion now. If we start pushing back into this zone, then I'm willing to look for the EM1 setup play right here. If we start breaking below here, so that means potential entry model 1 here. You guys know what an entry model 1 is. It's the reversal play, right? It's something that looks like that. If you go to page 50 on your ebook right here, there we go, something like that here. Okay, if you invert the skill, we might be looking for that continuation. All right, so this might be a nice setup, fam. A short play, stop loss above, targeting the previous range with the 2376 as your 76, as your key level here. Something in that manner is what I'm interested in. Okay, if price decides to continue to drive up, after it can come down, you can flip that potentially into a bullish structure as well again. So I'm definitely willing to take the risk and to look for shorts here to see what we can do based upon that rejection play. Okay. So that means sell stops below this level, something in that manner. I'm gonna set right there, and then looking for an entry model 1 entry play on the pullback, which then should align also with the 4 hour as well. So All right, I'm gonna enter right here. Short, boom. Stop loss is be above the highs. And I'm looking for the pullback into the range. And yeah, good luck, G's. A short-term pullback is what I'm aiming for. I want to put my stop on break even the moment we start breaking the lows here. Let me see which one it was. 2378? 2378, yeah, right there. 2378. I want to look for this pullback. Boom, that's a quick one. If you could smash through these lows, it would be absolutely fantastic. If you can break through these levels, at least to that first low, then it would be good. Just to clarify, there's an EM1. A very clean entry model 1 on the lower time frame. I think we're there already. There we go. We're there already. All right, so that's first TP. First TP hit. Right there. And you can put your stop on break even here. You want to see that follow through. You want to see that break. Closures in 2 minutes though. All right. So it might be smart to do because this is the 4-hour closure. So you take your profits out and you wait for the 4-hour closure to do its thing. And you let price just do its thing now. And if price decides to come up, whatever, doesn't matter. If price comes down, then I think it's worth it to look for reversal plays again to the upside. The idea will be if you just continue to smash further. Five-minute closure has to fall beyond 23. Yeah, the 5-minute closure has to break below. If it doesn't close it below, so we have like 15 seconds left here, fam. If we close below the lows, then it's practically a done deal. All right. Otherwise, I'm gonna take out a little bit more. Okay, we closed. Yeah, we closed. Yeah, okay. So I'm gonna take out a little bit more. Then I've taken out around 50%. And then I leave the rest running. All right. That's it. So 50% taken out. So that's around 500 bucks. And now we leave the rest running in case here. Because if we would have closed below, we didn't need to take out more. And now if we come down, we take it all the way back. The rest we take all the way down here. That's why. That's why. That's exactly why. Okay, we're still in. If you flip this, it's done deal. But it's pushing up as well here. Are we looking to short? We're already in the trade, my friend. We've already taken profits. If we would have closed below, we would have kept around 70% in our trade. But because we didn't close below, we closed 50%. Stronghold here at these lows, 2377 in particular. Every time when it pushes down, it pushes back up again. Almost like you can put sell stops below the lows again. Yeah, now you want to break down. You want to push through. There we go. That's what you want. You want to break down. So yeah, this is up to you guys. You can leave it. You can take profits here. This is up to you to decide what you and how you manage your trade. Break even is definitely a thing now. And you have broken it. You have closed below it. You even have closed below the lows now. With the 5-minute candle at least. So now you want to see follow through to the downside. That's it. That's what you want to see. 15-minute entry model 1. Alright, G's. It's as clean as it gets here. And then I'm still looking for long continuations, to be honest. I'm still want to look for bullish continuation, but yeah, we might have to come down first. we might have to come down first. And this is a serious level as well here. So pay very close attention to the 2367 or 76, sorry. As well here. Let's see what the dollar is doing. Dollar is pushing up again. So that's good. Yield as well. Yield as well. So we're still pushing. But we're gonna find support here. Yeah, I'm gonna go out. I'm taking out my profits here for now. You know what? I'm gonna leave 20% running and that's it. Okay. Done. Leave the rest running, G's. Why? Look at this level here in general. 2367, 76 series level. Dollar still trading below it. Okay, it's just a pre-concern. The rest is for the future. That's it. Back into the range, and then there we go. That's why. Wow. Damn. Yeah. Yeah, the 2376 level. Can price still come down? It can, but definitely TP2 here was a good idea. If there was clean, let's say it was super clean, right? There was not much structure in between. It's easy to just leave your trades running. There's no need to start taking profits here, but you know, at these critical levels there, and you reject from it, you could see it on the lower time frame. Right here, you had these 1 minute candles here as well. You can see that it's just not, you know, you can kind of feel the structure here, right? So yeah, it's definitely been worth it to take some profits again there. Yeah, this might continue to drive. Let's see. Yeah, we left 20% running. That was a quick move, man. It appears that the 5 minute time frame in 2376 has denied the bear close. Now, it was definitely a strong level. We knew it. We saw that level before. We talked about this level before as well. It would have been so easy to just look for a reaction here, but you know, it all depends on the lower time frame, closures and all that stuff. Okay. But it was a pretty clean 50-minute entry model 1, guys. Do you guys saw the entry? Let me know. In the chat, type in a yes. I saw the entry. I know exactly how it works. What we were looking for. Why we took it. And so on and so on. Okay. It's these top wicks, these double wick confirmations, the break of the lows, and that follow through play right there after an expansion already. So there was definitely some ground to cover there. All right, especially after that move. And you know, we're kind of heading in towards this high as well, this structure on top of that swing. So a short-term pullback would not be unusual there. Okay. That's beautiful, Juice. That's an EM1. I think that recovery is going to happen here. So, yeah. Keep your stops on break. And then just let's see what we can do in the next one. Because this is just... you could have said, yeah, closing full here. But... you never know, man. With that gap below and with this range and the way gold is moving, you know, leaving 20% off the table is sometimes on the table is sometimes not a bad idea. Alright, that's it, Giz. Yeah, we got out. So TP1, TP2. GG. Dollar pushing back up as well. That's interesting, by the way. Can price still roll over? It could. I mean, it could. But this reaction from like 23.76 was very strong. Very strong reaction from that level. Yeah. Let me get a drink, fam. Give me 1 second. There we go. I think dollar is starting to push back into the range. If we come back into the range itself, then you know, for my community members, your USD might be interesting to look for because you are still around the previous daily very high. That's just something in my mind in case you guys are looking at it. Okay, for the guys in our group. Yeah, that was a false one. Wow. So good job, fam. Good job, good job, good job, good job. Connor says stop loss hit. Stop loss hit. What are you talking about, G? I think you guys are a little bit confused. A little bit confused. I don't know. Entry here. Stop loss there, a break even there. Take out some profits there. TP2 there. Price comes back to entry. Okay. Yeah, if you enter here, you don't never force a trade. That's something I can definitely say. Okay. I really don't get how your stop loss can be hit here. Because our initial stop loss was there, by the way. Yeah, if you are late, make sure you come to the party early. It's better to come to the party early because you never know when these trades are gonna come. They can come at the beginning of the stream. They can come after the stream. You never know when the party's starting, all right? So it's up to you to decide if you want to miss out or if you just come here early so we all align together without any confusion or whatsoever here, okay? So come to the party early, and then you should be fine. You should be fine. If you come halfway through later on, and you're like, oh, I don't know, and random, and you see my trade, and you think, oh, should I enter? And you enter later, and price reverses, yeah. You know, we can make money, and then you're not making money. It will be very unfortunate. That would be very unfortunate, right? So yeah, GG fam. Let's see what we have here. What about a second entry? I would wait now. The reason why I'm saying that is because you did take out the lows, and you bounced pretty aggressively from the 2376. So when we took our second TP here, the moment we did that, the price shot up aggressively. And you know, it's usually not really a good sign. It could still roll over. It could still come down and roll over. I'm not saying that, but I mean, it will not be my favorite, right? Not my favorite piece of cake. Might better to see if you can just close below the 2377 again or something like that, you know, and see what you can do from there. But yeah, the entry model itself was at the 2379. Dominic says, first of all, don't trade with us if you haven't read the ebook and don't know what LTA is. Volume is king and risk management first. Yes, sir. I agree with you, my G. Why short? Well, we got overextended here. We tapped into one of our zones, our key levels. We created like our triple confirmation play, and now we're looking to see if we can take price back. This was the idea, at least, to take it back towards the previous range, and then from the previous range onwards, see if we could potentially look for bullish continuation. The idea is to eventually go to the Sunday open. If we can get to the opening price of the week, I'll be very happy, especially based upon the weekly candle here. So that's something that we have in mind. It's something like a retracement and a continuation to the upside. But if the 2376 says, you know, until here and not further, then this might be the low, the short-term low here. We have to wait and see. Cameron says if we get another rejection at 23.76, I'm looking for longs. Yeah, we're gonna check it out. We're gonna check it out. All right. ICT says that volume doesn't matter. Okay, well, good for ICT then. It's crazy actually that he says that. I'm not sure if he actually said that, because I can't believe that. I can't actually believe that that's the truth, because everything is built around volume. I mean, the orders have to come from somewhere, right? Somebody has to place the orders. So I'm not so sure about that one. But I don't know if he actually said that, so... might be speculation. For us, our digits right here, we know these key levels are key levels for a reason. Like these levels are not just like blue and red lines just for fun. We have these levels there for a reason. And if we see certain confirmations from these levels, we decide if it's worth it to take an entry from. And if it's not worth it, because other things do not align, we don't take the entry. And if it is worth it, because these other things do align, or align enough for us to take a trade, then we take the trade. That's the confirmations we're looking for. So it depends. In this case, you came back to the Friday range, the early previous day at 2281, and that was that. That was that. Carlos says if volume is not the king, let those ICT explain today the GBP NZD move. Bro, that was insane. That was insane. We looked at it in London. That was insane. That was absolutely insane. You're right. You are right. I think it was a news move though. It was a news move, but yeah, no, that was insane, man. You guys want to see it? GBP NZD, we use our indicator, limited LTA concepts, session breaks and New York Stock Exchange open, Sunday open, all right? It pops up for you. I developed it for you, so you can have it where you can see each individual trading day. So let's say this is the Monday, then this is the Tuesday, this is the Wednesday, this is the Thursday, this is the Friday. So you never have to guess which day it is, you know, what happened on a Monday, because instantly you know, okay, Tuesday, we went up, consolidation, right? It also shows you the Sunday open. Once the week is passed, you use the volume profile and you draw it from the Sunday the 30th, the blue lines, so the Sunday to Sunday, right? This gives you the range information of volume of the whole week. The whole week, okay? And where is the most volume traded? This red line. This red line is what we call the fixed, so the previous week, in this case, POC. You can find it here on the page if you want to. If you're new to LTA concepts, you can find it, okay? You can find it on page number 20-ish something, all right? 27, 26, 25, sorry, 20, my bad. I should know it by now. 23, okay, page number 23, right here, all right, the previous weekly POC. Previous weekly POC and the Sunday open, all right, that's your tunnel, all right, it's the Sunday open and the previous weekly POC, they come together. This is what we call the tunnel play, all right? This is your kind of your, you know, you could say your support or whatever the case may be. This is how you can call it. It's kind of your potential support. If price taps into it and it gives you an entry model, then you take it. Then you take it, okay? And these entry models are on page 50 of your ebook. And it's the same thing as what we took today, right? You have that double wick confirmation. The third candle broke the high of the second candle. You have your previous weekly level, which is built around volume. You're trading above the Sunday open, which is beautiful. So the good thing about that was that you actually took out the lows, right? You consolidated. You then came down to aggressively push up first. You tap into your zone and you skyrocket right there, okay? That's a prime example of how you can utilize volume and how we developed LTA concepts for you to make sure that step by step you can dissect the market without making it too complicated for yourself, just using one tool, but also having the understanding of course, the trend, the structure, right? We're trending upwards. That's important to take consideration, right? We're trading above the previous weekly range. That's important to take consideration. We have set in the bottom wick on the Sunday open. That means that the bottom wick of the weekly candle was set before we moved up, before we came down. All these things matter, all right? It's not just key level entry model. It's key level entry model and everything around it that determines your entry, okay? That's a prime example of why we developed this concept and why we believe in it so much. And why I believe personally that volume is a necessity. And I'm not talking about big green candles. I'm talking about orders executed on the price chart. So how can you get that indicator? You can get it for free. You can go to our Discord, okay? Go to our Discord, LTA Indicator. Click on the link on top. There we go. It's free and you add it to your favorite indicators. And if you want one more, you can also get this one, all right? It's this indicator right here for gold, for example. It's called the limitless higher time frame candles. So limitless LTA concept, higher time frame candles. You can get it right there. You go to the 1 hour time frame and boom. Next to your candle, this one pops up. You can change it to anything you would like, all right? The daily, the weekly, whatever you want to see. You put it there, it comes next to your chart and you have it right there, all right? Right at your price levels as well. So you know exactly at your same price levels from your 1 hour chart or your 5 minute chart, how it looks on a daily, okay? Or the weekly or the monthly or the 4 hour, whatever you want. So get these two indicators for free, my G's. So yes, New York Stock Exchange open. We're still having a hard time to break it, eh? Still having a hard time to break the highs here, potentially. We'll see what happens. That bounce at 2367 or 76, my bet, was an aggressive bounce. So overall, gold has been just trending up, trending up, trending up right here. We have to respect it. We have to respect that initial trend that we're forming, that we're shaping up. So this is going to be a hard level to break. If we start pulling back into that level, it's going to be very hard to break. Very hard to break. Unless we didn't break it earlier. If we start coming back at it again, we pull back into that same level at 23.76, 77, then it's going to be tough. It's going to be tough to break, I think. But if you do break above the 23.81, the goal is to bring it back to the Sunday open. That's the idea. So the question is, from where? From where? But yeah, early previous daily very high, man. So far, so good. It's 45, 45. Why should I care about volume? I just wanted to understand it. It's a great question, my friend. Okay. So many different layers, bro. It indicates market strength. It is, you can identify reversals. It's a volatility indication. It's the ease of liquidity, getting in and out of the market. It establishes market sentiment. There are so many reasons why this is important, but the most important for me personally is to understand areas of interest. So not about time volume, about what time the most volume was traded or what time, you know, we saw the biggest green or red candle. No, it's about during what period of time, at what price levels were the most orders executed. So why is that? What is the reason why 10,000 contracts were executed at 23.76 and 20,000 contracts were executed at 23.81? Well, the reason is because there's more interest at 23.81, right? So if price gets there again and price gives you a confirmation, a certain entry confirmation, and the timing is right, then you can kind of dissect if sellers or buyers, it depends on the situation, are in control. And if you can then conclude that sellers are in control or buyers are potentially in control, you can take advantage of the spread. You can take advantage of that gap that's getting created. And it's very hard to manipulate volume, especially when you trade the Nasdaq or the S&P on futures. Right? The amount of contracts that get executed on a day-to-day basis, it's absolutely crazy. Okay. Think about this, for example, the E-mini Nasdaq, the E-mini I believe there are around 400,000 contracts executed throughout one session. And that's just the E-mini. So I don't know how many of there are, you know, if the micros, it's absolutely crazy. And that's just the Nasdaq. So far holding up very good, right? So we just took advantage of that rejection play. If he had that follow through, it would have been incredible. It would have given us, you know, it would have turned into a big trade. Can't complain though. We can't complain. Dollar is still stuck in the range. Could be waiting for the uncle. Yeah, I think the worst is yet to come, IG. I think it's still coming. I think the dollar will show its worth later on. We have what, the news in like, or not news, but we have this event again in 20 minutes. So, you know, we might see some big price movements again. Dollar is getting rejected, looking very weak. But, you know, it's holding up. It's holding up and we might just go. We might just go at some point. I would not be surprised. I would not be surprised if that would be the case here, but yeah. So please share this playlist. This one is separated. Yeah, I know. Okay, well, we'll give it to you, my man, in Discord. I'm not sure if you have epidemic sounds, but if you do, this one is for you. By the way, for the group, do you like the London session so far? All right, it's just that it's very chilled. We look at all the charts, we discuss anything, you can ask anything. There's always somebody that got your back if you are not sure about something. That's the idea, okay? I still let you figure it out. You still have to make your own decisions. You still have to grind and execute the way you want to do it. But it's getting handed you. It's getting handed on a silver platter. It's getting explained, and you know exactly what to watch out for. All right, this breakout could be interesting if you start breaking above the 23.81. Yet another push up, another break up towards the upside here from 22.76. 5-minute break potentially. Let's see how we go here. We have a hard time breaking it, geez. But it looks stronger. It looks better. All right. Yeah, it looks better. It looks better. Hello guys, are you familiar with the Dow theory? I actually am familiar with the Dow theory. This is actually one of our biggest inspirations as well. So a big shout out to you know, these guys that developed it. Mr. Charles Dow is his name. At least I believe so. From the Dow Jones and Company. What these guys have done have created something very similar. It's actually not that different, all right? Primary movement, understanding the major trend, then going into the minor movement with volume to determine the price direction. But it doesn't mean sometimes that you cannot counter trade, in my opinion. Right? I think counter trading sometimes beneficial. If we didn't counter trade today, we would have not had this. This trade. It's not always the case though. But we saw it coming from the moment we started to push up aggressively. That once this was rejected, that it made sense for a little pullback based upon the 10-year as well. Pushing up again in this range. At the bottom of the range itself, pushing up. That's why gold has a hard time breaking now. At least on the lower time frame. You can see that it has a hard time breaking it. James says, yo bro, this is my first time. Can you tell me about yourself? Do you trade all the time at opening of New York? Sorry, this trade setup is playing out and I'm asking this question. Yeah, we trade a little bit later, man. New York Open, around the New York Open. We open a gold chart together and we see what happened. If price already moved up, sometimes, you know, price moved before New York, then you have to be a little more patient. Sometimes we get a trade right away at the beginning of the stream. It all depends, my friend. But welcome, bro. Welcome. Alright, I think this is the first break that we have seen that's proper. Like a proper break. After 2 times trying to break it, we couldn't break it. We came back down and now we're pushing up. So we might be shooting further. Alright. Let's see how we close this 5 minute. If you can flip this into support, that would be awesome. That would be awesome. Lorenzo, nice trade you had before. Great, thank you. Let's see what the guys are doing, what they're looking at. Let me sneak. I always try to sneak peek real quick. Ooh, okay. Entry Model 2. Congrats on the trade, G.
Congrats. Thank you. Thank you.
Entry Model 2. GU. Stop loss hit on GU. And a win on GA. I think his risk reward is solid. Yeah, we're still getting rejected. We're gonna see closure in 9 seconds though. Yeah, what's happening with the GBP, fam? What's going on? Keep me in the loop. We were looking at it at the London session, but something happened after that. Yeah, damn, GU went. There we go. You see that? GU took the highs. It went for the highs eventually. Okay, we talked about this earlier stream. It just smashed through the highs right now. So this was kind of expected. GJ continuing. Yeah, the British pound pairs are crazy. So 2381. If you see like a double wick confirmation in that level, I'm willing to take it. I'm willing to take it along here. If it goes, it goes. And we wait for the next one at 2386, which is also fine. Because the market is pretty reliable right now, right? It creates these clean highs and lows. And if you come up, there might be a chance of retracement, of a continuation, but also this might be a quick scalp as well if you pull back into that level and then pull back. So it doesn't really matter too much. We should not be forcing, I think. These clean entries like we've seen here on the 50-minute was just a perfect example. Unless you flip it on the 15, of course. Then it's a little bit different. Yeah, dollar is pushing back. It's time to wait for Uncle Jerome here. You guys want to listen to Uncle Jerome today or not? You guys are like, mwah. Not my style. Not my thing. Or you guys want to listen it? Side screen, like little side screen here in the bottom left. All right, still going. While the dollar is going. While the youth is going. Interesting, fam. This is Uncle Jerome. I think it has to do with Uncle Jerome. They're all pushing. They're all pushing. Dollar is pushing. Youth is pushing. Gold is pushing. Damn. Nasdaq is pushing. Everything is pushing. Everything is pushing. It's just all the money comes from a big bubble. We call that the money printer. And it gets just thrown away. Nasdaq, equities, gold, bond market, the dollar, the British pound. Feels like Christmas. Except for Bitcoin, unfortunately. Except for what we really truly care about. At least what I care about. But that will come. That will come. It takes some time, but it will happen. Just give it some time. Just give it some time. Spy the dip. Damn. Lorenzo, what trade that you took? We took the short from top to bottom. And now we reclaim this high. So now we're pushing back towards the next level. And this is just going nuts. Nuts. It's just going crazy. And this is 5 minutes before Powell starts speaking. So I'm always curious to see what happens when that, you know, gold always tends to move big before. So, you know, when Uncle Jerome starts speaking, gold starts going on a little tantrum. We've seen that before. Okay. But the good news is we're at the next stage, the next level. So yeah, the Sunday open, it comes now very, very close. The Sunday open at 23.89. This also means by default that the weekly candle on gold now has been almost flipping bullish, right? We're almost there. Yeah. And if that's the case, you're gonna see a strong weekly candle. You have your major resistance still at 24.18, 24.19. If you start driving up and you close above it, then this head and shoulders, what people were talking about, is out of the window. Will we set any limit orders? I don't think so. I think we wait for the same confirmation. Might be on the lower time frame though, not on the 15-minute. I wouldn't buy what maybe sell. I would not buy either. No, I would not buy either. I agree. At least not now. Definitely not now. If you're in a retracement, maybe, but not at this this exchange, this move here. So what is this? Like a 50 pip gap? It's pretty madness, by the way, that this is a day before the CPI. Usually you have very boring markets. This is not boring at all. This doesn't look boring to me. So what's like the stop here? 58 to 50, 42. All right, 5 minutes. Man, price is going crazy now. We might put it up. We might put it up for a second here. See if Jerome affects price. That's all we want to look for. We don't have to listen to the whole thing. But I just want to know if he impacts price a little bit when he says something specific. If price starts running like it's doing now. Damn. Yeah, we can listen to it, fam. Let me see if we have it. Let's go to the 5 minute. Wow, look at GJ. GJ as well. Very wild, by the way. Very, very strange. Well, not strange, but very, very strong. All right. The uncle. My uncle. Oh man, this guy looks like my uncle. My uncle's dead already, but I mean, he still looks like it. As far as I remember him, he looks like him. Anyways. Let's see if he can. I don't think he's live yet, right? I mean, have you guys got the link? Let me know. Drop it in Discord. Drop it in Discord. Ah. Wait, there we go. Yes! Uncle Jerome, baby. Boom. Vamos. All right. Yeah, thank you, Josh. Shout out to Josh. We call him Uncle Jerome. We call him Mr. Labor. Mr. Labor. What do you know about MSB? No, I don't know about their YouTube channel. We'll check them out. Yeah, we'll check them out. So if price breaks below the 2381 again, then a retracement back towards the lows again could also be a scenario. But so far we're holding up. We're holding up here in the waitance of, I think, Mr. Jerome today. That's what it is. Let's see if they have some better questions than yesterday. Yesterday was madness. Are we behind? Oh, we're behind. Thank you. You know that every single person in that Congress, literally every single person, is at least 60 years old? Like, at least? Is that normal? Shouldn't this be like a dynamic, young, old, you know, we're, 2024, man. Let's just bring on some young energy here. Let's get it started, man. This looks like a... I don't want to say it in English. A bejaardentehuis. That's just... We're gonna see. So what are they fighting for? They're fighting over the American economy, my friend. They're fighting about the battle of the Republicans against the Democrats. They're fighting about money printing, about rate hikes or rate cuts. They're fighting about the survival of our species. That's their conversation of today. So we'll see how gold reacts.
I don't even know what questions they would ask. I'm curious what
Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. The hearing is titled The Federal Reserve's Semi-Annual Monetary Policy Report.
You guys can hear it?
Creative titles here, and that is our traditional title for...
Is it too low?
Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I'll note at the outset this hearing has a hard stop at 1 p.m., which we will strictly observe, which seems only humane. I'll now recognize myself for 4 minutes for an opening statement. Thank you, Chair Powell, for being back with us today. With prices increasing more than 20% since President Biden took office, inflation remains top of mind for American families. In fact, only a quarter of Americans describe current economic conditions as good or excellent.
Let's keep it close on the dollar.
The most recent data
Also
from Gallup's Economic Confidence Index. Despite President Biden's gaslighting, inflation was not 9% when he took office. It was out of control. The out of control inflation we're experiencing now is something that this administration did not inherit, but is a product of their policies and their overspending. The nearly $2 trillion partisan and fiscally reckless spending as a part of the American Rescue Plan poured fuel on a smoldering inflationary fire. After a delayed response...
Let's smash up that like button for Uncle Jerome. Yeah? Okay, thank you very much.
...rate hikes to ease the pain caused by Democrats' failed economic policies. It is a response, not the actual disease, but the response the Fed is trying to tame these flames. but it's a response to Democrat policies here on Capitol Hill in the administration. So far this year, inflation has been more persistent than many, including the Fed, previously expected. There's still work to be done to reach the Fed's 2% target. As I've repeatedly said, the Fed's...
Any trade ideas for dollar yen? We'll look at it after, my G.
I think, as I repeatedly said, the commitment to independence of the Federal Reserve is of utmost importance, and it is critical, especially in a political year like this. Just as, Chair Powell, just as you did in previous administrations, you must not allow politics to cloud the Fed's monetary policy.
That's perfect. Wow.
However, despite your best efforts, the Fed independence remains at risk. And unfortunately, calls are coming from inside the building. Under Vice Chair Barr, the Fed's regulatory and supervisory agenda has become politicized. Most notably, the development of the Basel III endgame proposal has been a mess. This process has been cloaked in opaque standards and timelines set at meetings of unaccountable global governance bodies. The Fed has promised to process 410 almost universally negative comments, public comments, regarding the unjustified and underutilized initial proposal.
Let's see how we close this hourly candle, my friend. But so far the yen looks very weak.
Recent press reports, which seem to be the only way Congress gets details on the Basel III endgame progress.
Yeah, still very weak, very weak. We'll never counter or go against the yen right now.
Quantitative impact study. That is welcome. And if true, this is a promising development. Chair Powell, the last time you testified before the...
If you close above here,
the initial Basel III endgame proposal will
or you pull back into the 161.5, you can start looking for continuation longs. That's what I would do. And if you break structure, of course, you might come back towards the lows, but I doubt it, unless something crazy happens.
I'm concerned that press reports also claim the Fed will tuck any changes to the proposal into this quantitative impact study.
161.5 for 2.
Including the substantial changes to the proposal, would then be issued for public feedback with relatively paltry comment period. I'll reiterate to you here what I've said to you in private. Broad and material changes to the Basel III endgame necessitate a full reproposal, full stop, full stop. Failure to do so will result in an immediate Congressional Review Act vote out of this House of Representatives as quickly as we can possibly process it. Now, it doesn't have to be this way, and I think the Fed adhering to its longstanding principles here is highly important, especially with this interagency process. I'll close with this. Your steady and capable apolitical leadership of the Federal Reserve has shepherded our economy through extreme uncertainty. We now find ourselves in the midst of a new type of uncertainty surrounding the leadership of our nation. Doubts, fears, and panic often lead to bad decision-making and even worse policy. I urge you to reject outside political pressure in this volatile time and stay the course for the good of the American people and our economy as a whole. Thank you for your service, and I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters.
Thank you very much, Mr. Chairman. Welcome back to the Honorable Jerome H. Powell, Chairman, Board of Governors of the Federal Reserve System. Chair Powell, as we saw with the latest jobs report, the labor market remains strong and the economy is surging.
The labor market is strong. Shout out to the labor market, ladies and gentlemen.
The prior administration that had the worst jobs record since the Great Depression, President Biden has now overseen a record 15.7 million jobs created since he took office, with 206,000 new jobs created just last month. Not only that, but under the Biden administration, we're witnessing low unemployment rates, rising wages, and stabilizing prices for goods and services. This is not only because of President Biden's strong leadership, but also because of the historic legislation signed into law by President Biden, which has resulted in lower costs, created more jobs, rebuilt our infrastructure, supported small businesses, eliminated mostly junk fees, wiped out more than $144 billion in federal student loan debt, for 14 million borrowers and cut child poverty in half.
So far, still holding up very well, but
continue to advance policies that are providing good-paying jobs and an economy that works for everyone. Now, while I'm pleased to see that inflation is declining, the latest data makes clear that housing remains the #1 driver of core inflation. Since 2020, house prices have increased by nearly 50%, with Americans now spending on average over 30% of their income on housing. This is a top priority for Democrats, but remains an afterthought for Republicans. Earlier this Congress, I reintroduced my comprehensive legislation housing package, including the Housing Crisis Response Act. This bill provides more than $150 billion in fair and affordable housing investments, representing the single largest investment in affordable housing in our nation's history. These funds would create nearly 1.4 million affordable and accessible homes, bring down housing costs for all, and revive the American dream of home ownership.
The American dream, baby, let's go.
Committed to getting this bill across the finish line and continue to hold out hope that our Republican colleagues will finally join us in this effort. Unfortunately, extreme MAGA Republicans are not just ignoring housing inflation, they're advancing their Project 2025 manifesto that would dismantle U.S. democracy.
Affordable housing.
As we know it today. Project 2025 is authored by almost 24 former Trump White House staffers and Trump administration officials. It was compiled and published by the ultra-far-right Heritage Foundation, whose CEO recently declared that they are, quote, in the process of a second American revolution, which will be bloodless if the left allows it to be, quote, unquote. And if that kind of talk reminds anyone of the rhetoric we heard in the lead up to and on January 6, 2020, it should. Project 2025 promotes radical ideas to materially
dollar is still pushing. It's not coming down. It's not coming up. It's still ranging in between these two key levels.
Wants to put you out of a job, Chairman Powell.
It's not looking strong though.
To your testimony and hearing from you, a Republican who was first nominated by President Trump, about your thoughts on the importance of the Federal Reserve and the work you have done to help our economy. And I yield back.
Gentleman yields back. I note for the records, Jerome Powell was initially nominated by President Obama to the Board of Governors of the Federal Reserve.
Affordable housing.
Before being nominated by President Trump to chair. So here we are. We'll recognize the chair of the Financial Institutions Subcommittee, Mr. Barr, the Andy Barr variety, for 1 minute.
Thank you, Mr. Chairman. Welcome, Chairman Powell. Runaway inflation and increased interest rates necessary to confront it continue to hammer Americans, and especially those living paycheck to paycheck. Workers and families feel the pain, making everyday purchases at high prices in the grocery aisles and at the pump. They have suffered years of eroding purchasing power in their paychecks under the Biden administration's economic mismanagement. Heightened mortgage rates make it prohibitive for new home buyers to reach the American dream of a starter home for their family. I am pleased that the Fed is resolute in getting inflation under control. I am pleased that you have committed to an apolitical approach to this. I am not pleased by the Fed's opaque, unjustified, politicized, and underanalyzed regulatory proposals, which will ultimately hurt all Americans. We need to know where the Fed is going on its fundamentally flawed Basel III Endgame proposal and its opaque regulatory approach. I yield.
Well, Chair now recognizes the ranking member of the Financial Institutions and Monetary Policy.
Yeah, it's being a bit cautious with gold here.
For 1 minute.
Thank you, Chair McHenry and Ranking Member Waters. I'd like to also thank you, Chair Powell, for joining us today and for the role you have played in combating inflation and supporting a stable economic recovery. While the presidency is often the focus of political pronouncements about macroeconomic conditions, there's no question that that undersells the importance and the independence of the work of the Federal Reserve Board. While actions taken by the President and Congress certainly play a significant role, monetary policy decisions made by an independent Federal Reserve are the big dog in shaping macroeconomic conditions that shape economic
Okay, we're coming
outcomes
back.
for millions of Americans. And work continues on inflation, but significant progress has been made to bring the country in line with the Fed's 2% target. The good news is that macroeconomic policy is working as designed. Well-calibrated monetary policy with fiscal support from the American Rescue Plan, the Infrastructure and Jobs Act, and the CHIPS and Science Act has powered.
Yeah, this
strong
introduction is very,
competition, low unemployment,
draining.
saving off
I get it,
recession
fam.
when many
I
thought
completely
inevitable.
understand how you
Far
feel.
better, I should point out, than our peer countries.
I hope that Uncle Jerome starts
Well,
speaking in
Democrats are
around
committed to supporting your efforts
a couple
to cut
minutes.
costs for American families.
That would be nice. Well, at least
Well, now
it will be
welcome to
better.
the testimony of Jerome Powell,
There we go.
the 16th chair of the Federal Reserve Board of Governors. Chair Powell, you'll be recognized for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made a part of the record. You're now recognized for 5 minutes.
Praise rejection there. Praise rejection there.
Waters and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Federal Reserve's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving employment and inflation goals
I wish I could go long on that.
better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We've also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll job gains averaged 222,000 jobs per month in the first half of the year. Strong job creation over the past couple of years
we know this
has been
all, guys.
accompanied by an increase in the supply of
We're
workers,
updated.
reflecting increases in labor force participation among individuals aged 25 to 54 and a strong pace of immigration. As a result, the jobs to workers gap is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the committee's longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the
Trade houses, I did so.
at 5.25% to 5.5% since last July.
This could easily come back up. This could easily come back up as well.
Previous year and a half. We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. Our restrictive monetary policy stance is helping to bring demand and supply into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings,
dollar yen looks
however,
really
have
good
shown
if you
some
get here. If you get a bounce from here.
And more good data would strengthen our confidence that inflation is moving sustainably toward 2%.
But the dollar is slowing down. I agree.
We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with the operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Well, thank you, Chair Powell. I'll now recognize myself for.
Let's say we close back above this level.
Chair Powell, let's begin with this question of the Basel III endgame. I know you had questions about it yesterday, but I think we need further clarity. Your testimony
above 2381.
Vice Chair Barr's discussions with the FDIC and with the OCC on the next steps for the Basel III endgame. You mentioned potential changes have been made to the original Basel III endgame, that a lot of progress has been made, and that the board is very close to agreeing on the substance of those changes. But the next steps, that's really what I want to get into. Let's get through the mechanics of what happens next. If the Fed, the OCC, and the FDIC agree on the substance of whatever changes you're going to make,
we'll see why we close this one. This 50 minutes.
What happens then? Like, walk through the mechanics as you anticipated.
Okay. So we're very close to having exactly that agreement on the substance of the proposed changes pursuant to those talks. The next question then is how to proceed. And, it is my view and the strong view of a number of board members that the appropriate thing to do is to take that new proposal and publish it along with the effects of the quantitative impact survey and put that out for comment again and receive comment on that and then take some time to review those comments before finalizing the regulation. And that's a discussion we're having with the other two agencies now. We have not been able to reach agreement on a path to do that, but that's something that we think is the right way to do. That's what we've done in similar situations. There aren't that many similar situations, but when we see broad and material changes to an important regulation.
Do you think the dollar is going to be strong? Well, yesterday what happened was the dollar came down. It shot up.
Yeah, and that also avoids
for around
lawsuit risk,
an hour and a half, and then it started to die off.
And
in this case, we have been pushing down ever since. So,
Review Act. I think the other agencies here, if they're not agreeing with the Fed, they're running
waiting for the bigger move to happen. We have not
seen it yet. Here. This is not a trifling matter of policy. This is a matter of real substance for the independence of the Fed and rulemaking at the Federal Reserve, which I think we should be able to keep the independence of the Fed separate, especially in this political environment. But opening up to a new comment period, so that means you have to get consensus for the Board of Governors on the policy. You have to get the agreement of the scandal-plagued chair of the FDIC or the 5-member board of the FDIC. You have to get agreement by the acting comptroller of the currency. These people should not have real standing with the Fed on a matter of serious policy, especially with a chair of the FDIC that is being ousted by his own party as soon as they can get a replacement confirmed. It's an absurd thing that the Fed has to go to an acting comptroller of the currency and a guy who's going to be out of a job very soon at the FDIC and get agreement. But thank you for listening. That was more of to convey this. So the quantitative impact analysis, is this going to include the interplay with the stress tests, GSIB surcharge, all the other capital charges here? Will that be a part of the quantitative impact analysis?
It'll be this proposal, which does include changes to the GSIB surcharge, but does not include the stress tests.
Okay. But the goal here with the quantitative impact is to actually measure the impact of these rules as enacted, right? Based upon what is existing regulatory structures. Okay.
That's right.
All right, so let's get into the question of balance sheet.
Okay, this is good. This is important.
2.5 years ago, you stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample reserves. That's 2.5 years ago. Where are we in this question of what are ample reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far. So we've made quite a lot of progress. We think we have a good ways to go, and as I mentioned, and as you just mentioned, we've now slowed the pace, really with a view to getting as far as we can without creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually enable us to go further. We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand, and we'll find that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right, thank you for your testimony. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much. Chairman Powell, are you familiar with Project 2025?
Not really, no.
You've heard about it?
I really don't focus on these things at all.
You don't focus, but you know there's something known as Project 2025? The reason I'm asking you is because one proposal is to get rid of the Fed's dual mandate to promote only stable prices, but also maximum employment. This is your mandate. These are mandates, right? This is what you do. Is that right?
We do serve a dual mandate.
I like her.
And so if there was anything that would get rid of the mandate, what would it do to our economy? What would it do to our country?
So the question of which mandate we serve is very much a question for Congress. My own view has been that the dual mandate has served us well. This is something Congress can change and change back to a single mandate. There are.
What do you do to get maximum employment? What do you do?
Well, we have one tool on the economy, and that is we raise and lower interest rates. You'll find, though, that anyway, we certainly at the Fed do believe that the dual mandate has been a good thing, and it's enabled us to. It has not stopped us from controlling inflation when that was the thing that needed to be done.
And so, while of course I understand you may not have seen, heard, or read Project 2025, are you familiar with an effort in the country to get rid of diversity?
David says he's uncomfortable.
Inclusion?
He looks uncomfortable, right?
I see these things mentioned, but honestly, we're pretty focused on our task, which is maximum employment, price stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware that I created a subcommittee on diversity and employment in this committee?
Yes, I remember that.
And do you think that getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum
I agree.
employment?
Spent most of my career in the private sector, and what I observed was really successful institutions in the United States, companies, organizations generally, are those that do a really good job on diversity and get the best out of people and attract a broad, diverse range of talents to the table, and people feel comfortable speaking. So that's the way we feel about it at the Fed, and that's what we've been doing and will continue to do.
And do you think it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping diverse talent.
This is
That's
really
one of
next.
the
This
things
is
that are really
a
good,
crazy
US
rejection,
public
actually,
companies do well.
at 2383
Have you
here.
seen improvement during your tenure where diversity and inclusion has created opportunities for more jobs and helped to reduce the unemployment rate?
Certainly seen, I think you see over the course of my long career a big change in diversity and inclusion. And you see that in the private sector and the public sector, and I think that's generally progress. I do.
Under the work of this committee, and the subcommittee is chaired by Ms. Beatty, she was able to gather important data about what was going on in the private sector. And what she discovered was that many of the CEOs
You can see
and
how
others
gold is moving up and down, but there's definitely vibe. There's definitely things happening right now.
And we saw improvement.
Dollar, not really. Gold is definitely
with
reacting.
diversity and inclusion. Have you seen that?
There's no question. If you talk to CEOs, they get this. If you want to attract the best talent in our country now, you need to be committed to these things.
And so I would like
Take a look at the US30.
compliment you on the job that you have been doing. I'd like to compliment you on keeping us informed about inflation. Not only do I welcome you here today, I look forward to working with you for years to come. I yield back. Thank you.
Thank you.
The gentleman from Arkansas, the vice chair of the full committee, Mr. Hill, is now ready for 5 minutes.
Thank the chair.
Yeah,
Chair
it's slowing down.
So much, and welcome back to the committee. I want to pick up where Senator Tim Scott and Chair McHenry left off and reiterate my strong support for your comment yesterday in the Senate about the need to repropose the Basel III endgame. The Supreme Court's precedent, I think, makes clear that if a rule undergoes broad and material changes from the proposal to final rule, the public must be given a meaningful opportunity to review and comment on those changes. You generally share that view, I think. Is that right?
Yes.
And I'm looking forward to seeing the results of the quantitative impact study and the separate comment period, as well as an interagency agreement you referenced yesterday. Because of Dodd-Frank's role and the vice chair for supervision, Vice Chairman Barr's role and the Fed's role, would it be fair to say the Fed is a first among equals on proposing a rule like this? In other words, does the Fed have a supremacy position on determining whether it should be fully reproposed or not, or do you view it strictly as a collaborative basis? Just curious in your view on that.
I would say it's strictly collaborative, and I would say that our discussions with the FDIC, which Vice Chair Barr has actually been conducting, and the OCC, they've been very productive so far. So I want to make sure to say that we've continued to work our way through this, and I believe we will get fairly soon to a resolution of the remaining process issue.
Good. Well, let me turn from that subject to the court's recent decision to overturn the so-called Chevron doctrine. Many of us believe this was the first step to reining in decades, literally, of an unprecedented, uncontrolled growth in the administrative state. And so I think all of us on at least this side of the aisle are certainly saying to the Federal Reserve and other federal agencies in our jurisdiction that we want to reassert Article I authority over the direction that independent agencies work. Would it be fair to ask you to certify that because of this change in Chevron that the Fed would commit to promulgating new rules only if they're at the direction?
We're not there at
congressional.
I see sellers in the chat.
So I think, first of all, we're studying
not there yet.
and several other decisions that have just come down in the last week or two. So I haven't got anything definitive for you on that. I think you know us to be an organization. I know us to be an organization that is strongly committed to the rule of law. Supreme Court says what the law is. We'll always do what we believe the law is.
Well, I'll submit that question maybe in more detail in writing, and maybe you'll have a chance to reflect on that. Back in February, you were on 60 Minutes, and you said the U.S. budget deficit, the national debt are unsustainable. Do you still view that the U.S. is on an unsustainable fiscal path?
I do. I think I tried to be clear that the level of the U.S. debt is not itself unsustainable, but the path that we're on is unsustainable, and I think that is not controversial.
I think many of us certainly agree with that, and we know that when the the
It is interesting
deficit's
now.
at 3 times the economic growth rate and growing. It's of concern, and it's contributed to inflation. Just 3 years ago in Jackson Hole, Wyoming, you gave a speech where you were confident that inflation was transitory, which I think we've come to realize that's not the case. This hearing is sort of a can't-miss opportunity for the Fed to demonstrate some humility on the monetary policy decisions, which some on this side of the aisle particularly think have made inflation worse. Your August 2020 Jackson Hole speech, you said the flexible average inflation targeting framework regarding 2%, that you would let it run above 2%. Was the Fed blinded by the previous 20 years of global change that was deflationary and or you were not alert enough in 2020 to be more cautious about that change in policy?
So we were certainly mindful of a long period of time in which
So much manipulation this past 2 days with Powell speaking. People are losing their mind. Yeah.
Quite substantially. That was the
Tell me about it.
The thing we didn't see coming was the pandemic. It's not like
this is for sure a key level. So
it's like we had this
for sure, this 2377 and 76 level is such an important level. It comes down towards that initial bounce we saw. This is where the low came from. This is where we expanded from 100 pips. This is where we took our profits. Our TP2 was right there. So now we're back. Yeah, this level is really going to make a decision, decide for us, okay, is this just going to continue to drive, or is this just going to set in a higher low? And if it re-breaks it, I mean, who knows? This might look into a more bearish continuation play. But for now, if you want to sell from here, from at that support, then where are you going to put your stop loss? Then your stop needs to be there. At least I don't see any other reason where, or any other potential structure I could think about when putting our stops right there. If you want to go short right there, our stops should be right there. I don't see anything else that makes sense. Maybe there, but I don't think so. So anyways,
pandemic, and it really changed the way the economy is working. We had a big crisis. We did a lot of things. So the concerns that led us to those.
Chair Powell, this year the Fed tested 31 banks, up from 23 last year. Is that correct?
I believe that's right, yes.
And by estimating losses, revenues, expenses, and capital level under hypothetical stress scenarios, we did that, correct?
Yes.
And all 31 banks remained above their minimum common equity tier 1 capital requirements after observing losses of nearly $685 billion. Is that correct?
Yes, that is correct.
Yeah, I wanted to get those figures out and provide you with, you may have heard this, but I want to share it with the nation because your vice chair, Barr, made this statement, and I wanted to put this in the record, his exact quote from this great achievement. He said, "Our goal of our stress test is to help ensure that we have enough capital to absorb losses in a highly stressful scenario. And this test shows that we do." I thought that was a great statement.
Maria, great early morning analysis. Thank you, Maria. Shout out to you.
My question is simple. Will the 2024 Fed stress test results have an impact on how prudential regulators roll out a new and updated capital proposal?
So the two are really two different things. There's the Basel III capital proposal, and then there's the stress tests. So, and really the Basel III, as I mentioned, we've discussed, we're almost ready to put forward for further comment a revised proposal with material and broad changes to it. The stress tests are a different thing, and of course we realize we have to adapt those over time and be open to changes, and it has evolved significantly over time, but it's really a separate thing from the Basel III endgame.
give us a little bit more information on Basel III, because I worked with you with this. Our work goes all the way back to the Obama administration when we
All right,
responded.
still pushing down.
To
If you can reclaim the 2376,
with
that might be a good level.
And you and I worked that up where we came up with the hardest hit program to help those who were suffering with, those states that were suffering with high unemployment and at the same time high home foreclosures. And we were successful. And we've established that program, and it's still going on and helping many of our states. But, you know, I want to also share what is happening around the world as a result of our activities. The European Union is now set to delay key parts of its bank capital rules by more than a year so that their lenders will not be at a disadvantage. Over in Canada, it's important to know that their banking regulators have also delayed for another year, imposing high capital rules on countries' banks at the risk of making them uncompetitive. And the Swiss National Bank is highly unlikely now to adopt a proposed 15% capital requirement for UPS and other Swiss banks. And the Bank of England has issued a near final proposal to increase UK bank capital by 3%. And I think this is all a measure of your great work and that of your vice chair. And I just wanted to let you have a comment on that, please.
Sure. So we're committed to finalizing this proposal. Our banks are going to live with these rules for a long, long time. The main thing is to get it right, and that's what we're doing. What we do in the end will be consistent with the Basel agreement.
I fixed him, guys.
And helping many of our states. But, you know, I want to also share.
Sorry, it was my bad.
As a result
it was my fault.
Of our activities. The European Union is now set to delay key parts of its bank. Keep up the good work.
We'll recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you very much, Mr. Chairman.
Okay.
Thank you very much, Chairman Powell, and also thank you for continuing to indicate that you will look at the entirety of the economy, the whole economy. We appreciate that. All right, so one of the nation's largest banks recently warned in a memo, and it's also been voiced by smaller banks, that the current pace of regulations, such as changes to capital requirements and lowering debit card
50-minute close to buff
caps, could lead to new fees associated with checking accounts and other increased costs for small businesses.
Give us one more wick. Give us one more strong wick, bottom wick, whatever, something like that.
For small business, such as the R&D tax credit,
and flip bullish.
Deductibility and bonus depreciation. This does raise the question: Are you considering how these regulations and tax increases will directly work against
something like that? Give us one more wick.
Inflation. Moreover, with the proposed changes to Basel III, it is crucial to ensure that all stakeholders have a voice in this process, which you are stating will occur. And a Basel III
this might be interesting,
comment period are certainly
let's see how we develop.
Welcome. So, Chairman Powell, yesterday in the Senate, you mentioned that the majority view of the board is to repropose Basel III for comment period. Could you clarify if this means the proposal will be reproposed from scratch? And any other specifics you can provide?
Sure. So we haven't reached agreement on this. As I mentioned, we're working through this with our colleagues at the FDIC and the OCC. And I can't tell you exactly what the form would be. The sense of it would be, though, that we're making material changes and that we would want the public to have a chance to look at those changes in the light of the way they play off against the quantitative impact survey, and should have a reasonable
pull back
time
into
to
the
comment
range.
on those. In addition, we're focused on one big area, but
it's about this 15-minute
comments all across the spectrum, and we're reading all of those carefully. And we're not going to republish all of those. Some of those we can just make changes and move forward on. So it's going to be a very labor-intensive, time-consuming process.
Okay.
writing these things up takes a long time, and we're going to get it right.
Good, that's great. Obviously, Canada recently postponed, as did the EU and UK, for international competition standpoint. It seems to make sense, and so that's appreciated. Chairman, would you agree that excessive spending, increased taxes, limits
so if you flip bullish here, then
production, in principle, are a cause for higher costs?
There's a chance we come back here. Just come back towards the 2380, 81.
Labor markets kind of running contrary to your two mandates.
It can still roll over.
You're asking me a kind of a.
But I'm looking at this wick, this bottom wick of this next 50-minute candle here.
Economic fiscal policies that are not really ours to decide.
It's more of an economic question, but I appreciate your answer, sir. So when you mentioned recalibrate policy yesterday in the Senate hearing, was part of your thinking taking a more holistic view of economic conditions?
Yes, very much so.
Okay.
Yeah.
Okay. Chairman, is there any data?
It's hourly closure,
Support.
It's gonna determine a lot.
Greedflation.
An hourly closure above or below the 2376
has caused inflation. Is there any data to support
in 10
those
minutes?
comments?
So we look at it that this inflation has been caused by a combination of very strong demand and constrained supply. So it was really a high-speed collision between an economy that was reopening, and by the way, there was inflation all over the world at the same time. So these are some common factors. But at the same time, you had tremendous demand, for example,
Dollar's back.
automobiles. You had constrained supply because there weren't enough semiconductors. Long story short, but so that to us is what this inflation is all about. So
Dollar is back.
Observed, the sort of healing of the supply side at the same time. Restrictive monetary policies weighing on demand, and we've seen inflation coming down. From
so there's no data that supports that gouging of consumers is part of the inflation.
It's been very hard to track a connection with earnings and things.
Secretary Yellen mentioned that she didn't feel that there was grocery price shock and that sort of thing. Groceries and gasoline are the two driving problems for American families and certainly my constituents. Do you believe your policies are helping to alleviate in those two areas?
So a lot of things affect, let's take energy first. The energy prices are generally set at the global level. We do have some effect on that.
Sorry, Chairman, I've run out of time. Thank you. I yield back, Mr. Chairman.
Sorry, we can continue.
Great, thanks.
The gentleman from Missouri, Mr. Cleaver, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here. In some ways, I want to follow up or at least respond to the very civil, but I think reason why we need an independent central bank. And your response was, the
hourly closure in 8 minutes.
If I answered it, it would be along some kind of a political avenue, and you didn't want to drive on that avenue. So I'm also very much.
There's no correlation between gold and the dollar. Yes, I agree.
I've been on this committee.
Not during this season here. We saw everything pushing up.
It comes up quite often.
Dollar, gold, yield.
When the Federal Reserve was birthed around the turn of the century, I think around 1913, 1918, somewhere like that. Prior to the establishment of the central bank, was our country experiencing a lot of recessions because of no security? People felt no security, particularly the business community, in making big investments because nobody was in control. Just kind of think what.
So still clearly rejected here, right?
Is that
yes, I think the lack of a central bank between 1836 and the founding of the Fed was a period of lots and lots of depressions, and a lot of it had to do with the crop cycle and the banks not being able to handle the very large seasonal swings, and there was no central bank to provide liquidity. So that's really what gave rise to the founding of the Fed in the early part of the last century.
Do you think that it is dangerous to blend monetary policy and fiscal policy?
To blend them?
Yes.
So we try to keep them very separate, and we try not to express views on fiscal policy. That's for elected people who have undergone elections and won and make those very difficult decisions. We have a really specific, narrow but important mandate that you've given us, and we try to stick to that. And so we take your policies as given, and then we conduct monetary policy with that.
I don't want to draw you into any kind of a political response, but and I have not read all of this Project 2025 document. I read some of it online a couple of nights ago, but even whether it comes out of a 2025 or a 3089, whatever, one of the things that I'm concerned about, reading this from this document, that the document argues that the Federal Reserve is the inflation problem, and eliminating the Federal Reserve, imposing economic policy on the Fed that
let's wait for this hourly close in 6 minutes. What I want to see is this next bottom wick get informed in this next hourly candle. If you come up, you have like a triple wick. That means you have a triple wick 15-minute bar play. If you then close, of course, above the 2377, not above the 2376, you need to close above the structure of that support there in order for us to drive back towards the 2381. And that means you still have the double wick confirmation EM1 entry, but with the confirmation of a closure above, and it has to be an hourly closure. It cannot be just a 5-minute bar, or it has to be the hourly. And then you want to see a bottom wick get informed that at least slides into that previous structure, the previous level, to then flip bullish. That's the only way I would look for longs, and it would indicate me a potential buy towards the top here. But it means that the hourly candle has to close above the 2377. If it doesn't, and it closes below the previous bodies, then buys are, I think, for me, out of the picture.
I'm wondering here, as we try to figure out how to deal with this issue. Oh my goodness, my time's
Was that a question?
I didn't finish it, but yes. If you knew where I was going, please.
Gentleman's time's expired. We'll now recognize the gentleman from New York, Mr. Garbarino.
Thank you, Chairman. Chair Powell, thank you very much for being here today. Based on some comments you made today and yesterday, it appears you've made quite a bit of progress on changes to the Basel III Endgame proposal, and you're very close to agreeing some of those. The substance.
We usually don't watch this. It's actually quite enjoyable.
Said that.
Sometimes.
How deep you won't get into them, but
not too much.
I confirm what you said to my colleague, Mr. Musi. There will be, you're not reproposing some things. It's just going to be a partial reproposal.
That's what we're looking at doing, is major things that we've been working on, and there will be additional changes that will be made that won't be reproposed. That's what we're working on, rather than a full wide proposal.
So it's not a complete reproposal, just partial.
Yeah.
Can you get at least into? Can you tell me which components you're?
It's not until it's all agreed and ready to go and vetted. I'm reluctant to try to get into too many specifics, just because when you're doing these things, nothing is agreed until everything's agreed.
No, I understand. I'm not asking for what.
David says it's a buy. If you close this hourly below it,
you're willing to say
I hope.
I'm not taking buys. I'm not taking buys, because then you're gonna get this hourly nasty closure below these below these bodies.
So
and then you come back, you face resistance, you push back down again.
Of the board are at odds with your counterparts at the.
It's gonna be a headache. It's gonna be a headache.
How to proceed with putting out a revised proposal for comment. So if the FDIC and the OCC are not yet on board with allowing for a new comment period, who is holding up this consensus? Is it Chair Grunberg? Is it Director Chopra?
I don't want to say that we're at odds. I just want to say we're working through this issue together, and
someone's got to be holding it up.
Well, it's a discussion that we're having, and I think it's been constructive, and I think we'll try to keep it that way.
Okay, can you at least answer whether or not the 5-member FDIC board needs to sign off, or can you just go to the chair?
No, I think it's the board, and of course the comptroller is one person. But I think the FDIC can speak for themselves, but I do think their board would be the question.
Okay. One final question on timeline question before I move on. You mentioned yesterday that a reasonable prediction would be that Basel would not be finalized until the first quarter of 2025. Under this timeline, would it be safe to say that implementation would then not occur until at least the beginning of 2026?
Again, I can't be that specific. And, that's, someone asked me, does it sound like the first quarter of next year might be? And I said, it might be. I mean, there's a range of times it would take. The thing is, as I mentioned, U.S. banks are going to be living with these rules for many years. The point of it is to get it right, not to do it quickly. We want to get it right, listen to the comments, make sound decisions, and move ahead in a way that is, gives us a sustainable set of rules that we won't have to come back and fix all the mistakes in.
Thank you. I want to move on to another topic, long-term debt. You mentioned yesterday that you would most likely not move forward with other rules until people reach a place of understanding and acceptance of a revised Basel proposal. I hope that's the truth, as banks need to fully understand the implications of a Basel proposal before any action is taken on long-term debt. Finally, Chair Powell, I'd like to emphasize the need for the Fed to conduct a comprehensive, data-driven, and most importantly, transparent assessment of the current liquidity framework. So very quickly, will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity requirements?
I didn't catch the first part of that, the first part of your ask.
Will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity
on the liquidity thing? I'm not exactly sure what we're contemplating there. We certainly contemplate getting a full range of input from the public on that, because some of these are novel ideas, and we understand that.
All right, as the chairman said before, these impact studies are very important because they're to show what impact these rules will have. So I think that is very important that we have that, because we had a mucked up process with Basel 2.0, and I don't think we don't want to repeat that. And I have a little time left. I'm going to yield to my colleague from Pennsylvania, Mr. Music, because I know he had another question.
Okay, we close the hourly below. So buys are done.
My colleague.
So no more buys above here, because the buys that made sense here were us closing above and then potentially heading back towards the early previous daily very high. Now we're going to face that major resistance there. And of course, sells are out of the window, because if you have to sell here, you have to put your stop loss there. So there is nothing for sells now until you create some solid structure to put your stop above. Then it makes more sense for me to look for it. So you either break down or you push up at this particular moment and you start to break down. Maybe then you have some structure. So yeah, we have to sit this one out right now with buys here. If you would have closed above here, it would have been nice. If the dollar decides to the dollar is ranging. So if we start breaking below the early previous daily PVC, you can really set in, the reversal play. But for now, I think we're going to hover be between the 2273 and the 2276 for a while. But we'll see.
Chairman Powell, just back to what we were talking about, the price instability of groceries and gasoline, where we do have somewhat of an affordability crisis, has been termed. So would lowering rates in the near future be a pro-growth initiative, perhaps? Is that something that's being considered that would actually
don't make easy things difficult?
And give a clearer
I agree. You missed out on the trade, G. Come on time, my friend.
Help in these two categories, and in the end, increase in supply so as we lower those prices.
So, honestly, when we think about our near-term rate moves, we're thinking about a couple things, and the first of which is we want to be more confident about inflation.
My apologies, Chairman. I went over.
Sorry.
Chairman, I yield back. I yield back to my colleague.
The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. Thank you again for this hearing, and the ranking member, thank you very much. Chairman Powell, thank you very much for being here. We appreciate it. In fact, I was looking at your history when they were saying who nominated you when you got here and all that. In fact, you had public service even prior to that time, right?
That's right.
So I thank you for your long public service to the nation. I think
thank
you've been outstanding. I think
Appreciate
we all respect you deeply here. You're pretty boring here today, to be frank.
Sorry?
You're pretty boring here, to be frank.
Thank you. That's a high compliment.
Yes, it is. Because sometimes when you're here, there's all sorts of cameras here, and they're watching your every step and all. And I think there's a reason for that, right? And that's because the economy's doing all right. Am I wrong about that?
You know, take a look at our economy. We're growing at around 2%, it feels like. Inflation is down to 2.5%.
You guys think the economy is doing all right?
Unemployment's at 4.1. These are good numbers.
Yeah, I mean, I hear the parade of horribles on the other side, how the sky's falling, but I don't see the media here to attest to that. In fact, it's just the opposite. Did you read some of the headlines of the new government in Britain? Some of the headlines? If not, let me read one. It says, "New British government inherits worst economic plight since World War II." And in fact, there's a number of headlines like that saying that England's in trouble. I imagine if you were running their central bank, I bet you there'd be a whole bunch of media here beating you up to find out what the hell you're doing or what you aren't doing. And I think the reason for that, again, is I think the government here has done a pretty darn good job. One of the things you said you didn't see coming was the pandemic, right? I'm not putting words in your mouth.
Right.
In fact, I was here and I heard the parade of horribles that we were going to have a recession, maybe a depression. In fact, the country was going to fall apart. Did it?
No.
Yeah, this is going to take some time. All right, guys. Let's put on some music. We have listened to it right now. I think this is it. This is good. Because there is no more impulsive stuff going on, I think. Unless you want to listen to my uncle for a longer period of time. If that's really what you want, then just let me know. Send me a message. And we get it sorted. No problem. Eric Bus says we own a restaurant. Business is very good. Okay. All right. Tomorrow's CPI though. Yeah. Tomorrow's CPI. So anyways, if we pull back right now, gold is going to face major resistance in this zone here. Okay. This zone is going to be the resistance, the 2376, 2377. We close this hourly candle below it. We're above that range. So I do believe that if you start breaking below the 2373, that he retrace potentially back into the 2365. And that's a better potential trade setup, because if you see that rejection now in that zone, it becomes kind of obvious where you can put your stop loss if you start breaking below the 2373. And that is above the highs, maybe even at 2379, something like that. So then you have like at least, a 79 pip window against a 50 pip stop, 47 pip stop, something like that. Okay. From there, all right, from the previous daily very high or from the previous daily PUC, maybe even, it doesn't really matter because it's right next to each other. Okay. 2364 and 2365. This is still where you're maintaining that uptrend. You're still maintaining this overall bigger trend, that bigger play right here. We're still holding up. We're still trending up. So if you pull back in towards the lows here, it's still for me potential buy territory. I mean, I would not say that I'm completely bearish now, and I just want to see price coming down all the way. If we're reaching the 2265, I think 2265 is definitely something where I would consider, to look for buys again. If that's the case, it's more about, do we want to look for a short from there towards the 2065 to then potentially see if we can look for a reversal play towards the upside again? That's kind of the idea here. And the main reason why now it could be interesting is because of this rejection and this rejection. This closure, this rejection, and a potential then break below the range, which kind of holds a pretty decent risk to reward in my opinion. So that would mean you close below here. Obviously they want to go for the lows here, so you want to enter it when this candle closes below here, and then your stop goes above the highs, not the highs, above these highs. Give it a little bit of room, and then we target the previous daily very high. Definitely still on my radar if this is the case now, right? A potential breakdown here, and then target the 20 to 65 and then looking for the potential of a bullish flip. If that's the case. Does volume analysis actually work or just theoretical? No, it's just theoretical. It doesn't really work. So yeah, let's see if you can do that. That's the last shot. If you want to get a second trade in today or in this session. I never answer people anymore if they ask like, hey, does this actually work? I mean, I could just tell you it works. And I can just show you it every day for the past 100 streams that it reaches these critical levels and it reacts from it. Like the 2286 or something, or this one where we took our trade from, or, you know, right now, or before, or whatever. But in essence, the idea is that you should test it yourself. I cannot make it up for you. It's really something that you have to test for yourself. If you're interested in it. If you're not interested in it, then don't do it. If you're interested in it, then test it out and work with it. Get the ebook downloaded, go through it, test out, let's say, the previous weekly levels of your favorite instrument and see how price responds around it. And then make a conclusion. Shadi says, just got her G, man. I missed the trade. No FOMO though. No FOMO, man. Maybe the next one. What about the early previous daily POC? Rejection though. So, towards the previous daily very high. That would be nice. That would be nice. Should we trade from here? I would say an EM4. We talked about the entry model 4 yesterday. But it means you're going to tap into these levels. You're going to get rejected from it. Next candle comes in. It comes up and it breaks the lows. And if it does that, if it comes down, it breaks the lows and it starts to break below these levels, then I think that they want to go first for these lows right here. And we might continue to drive down a bit further, back towards the previous daily levels here. That would be nice. Mamas, did you take a trade today? So if you look at trades taken in the bottom left corner, it pretty much says it. I don't know how to make it more... more clear. Burrito says, play some Central C songs. Which ones? Yeah, if we can re-break this and we start really tanking and breaking down here and continuing the process, then I think that this is pretty nice. Because we know this is a serious amount of resistance. We know they have a very hard time here. And if you break below our critical early previous daily POC, which we couldn't break, we had a very hard time here as well. Until we broke through it. Then I think that we have some potential clean price action again towards the downside. Especially because this hourly candle closed below the previous hourly candles as well. And it would practically trade us into the previous range, the previous daily range. And it will take out the London and Asian lows, I believe, as well. London lows, London lows. Anyways, why are you not considering the at all the value area of the London session? That's a good question, my friend. That's a good question. So the main reason why is because you closed this hourly candle below the previous hourly candles here. So, you know, what's going to happen now is that even when you have buys here and you have a potential entry model here long, you're going to face so much resistance around this zone. Just right there. You're going to face a lot of resistance there. And you can see it already right now. So I'm really trying to avoid it. And instead of that, just try to trade with that trend now, potentially with that closure. And then, you know, holding that up. If you would reclaim that and reclaim the closure above the 2377, the tide can turn. But I think for now, it's not that beneficial. It's true, but it can be TP1. Yeah, but where? Yeah, okay, maybe. But I'm not sure where the entry was exactly. Because it was not a limit entry for sure. It would have been very small. I think it would have been very small and very hard to... yeah. Very hard to manage. John Paul Sparks, do you agree with Vantage manipulating leverage during certain trading hours? Can you be a little bit more precise, John? I would appreciate that, my friend. You can also send me an example on Discord if you want. I mean, I experienced some server delays once in a while, but I mean, I've experienced that on every other broker. So I'm not sure if this is what you mean. Don says, I hope you don't start consolidating now. Yeah, let's see, my friend. Let's see. I don't think so. I think we still will make a move for it. Well, let's see. The email came out today. Too much data. Copy here. You should have gotten it. All right, I will check it out. If not, please forward it to my email as well. Amazing. The guys are chilling already. I think they made their money. They're out for today. 2 wins, 1 break even, 1 loss. Okay. Win, 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 loss, win, loss, loss, win, win. 77, 13, 5. Okay, good. Clean. Confluence downtrend, entry model 1, previous week very low. W won the trade to make profit. My risk management was rubbish. I risked 1%. I risked 1% when we went into drawdown, closed half the trade when it was 0.4% down in drawdown. I then reversed it and took my TP at the end of the TP line. My main target was actually the Sunday open. What went well and what went better? Okay, good. Good things to work on. Tasman GJ, previous daily POC, 90% to R. And it kept going, my G. Okay. Anyways, good trade. Bro Lorenzo, expect a pullback from 23.72 to 23.81 after better short to be careful at this one. Yeah, so I was thinking about like a long first as well, right? But the reason why we didn't take the long was because of the hourly closure. Because this hourly closure is nasty here. This is why we're facing this much resistance now, right here at these two levels, right? It's that initial level that we talked about, and it's that double closure that we've seen here. So if price retraces back into it and it closes above it, I mean, yeah, maybe it's time to go and look for continuations until 23.81. But for now, I think that if we do flip and you start breaking down, then that's pretty straightforward short with stop loss above the highs. whatever the case may be. So it mainly has to do with this, with these bodies right there. Which one do you think stronger? 2377 or 2373? 2377. But we'll see. Do you think it's too late into the session to get a decent trade? I mean, the volume is still there. Yesterday we saw a pretty decent move later on. This happened at 11:30. That's right now, right? We saw even a big push. So anything is possible when this is happening.
That we do something that is comparable to what the other large jurisdictions are doing, and it's consistent with Basel. And I think that's what our banks want. That's what we want, and that will be best serving the public.
But you agree we should conform without gold plating?
You know, some things we've gold plated, and some things we haven't. And but I think we should make. I think our end game proposal should be at the end. Should be consistent with the requirements of Basel and consistent with what the other large jurisdictions are doing.
Are you confident that there's no legal conflict between the standardization recommended by Basel III and the regulatory tailoring mandated by Congress?
I think we can work through all that, yeah.
Okay. But if there were a conflict...
Basel doesn't impose any requirements on anyone. There's no enforceable requirements. Every jurisdiction does what it's going to do. Basel doesn't bind anybody.
Right, but the regulatory framework you're adopting would codify those recommendations.
Yes.
Which would have the force of law, right?
Yes, that's right.
And so if there were a conflict between the codified recommendations and an act
All right, moment of truth. This is important.
agree that an act of Congress would supersede
2377 here.
those recommendations?
Sure.
Does the loss of Chevron deference have any implications for Basel III?
You know, it's very early days to assess. There are several decisions that are about administrative law, and I think it's too early for us to say. I mean, ultimately, the question is, are the actions we're taking in compliance with the law? And that decision says that there will be a less deference or no deference maybe to the opinions of the agency, but that just means a court will be answering the same question, which is, are those actions consistent with the law?
The Fed has a target rate when it comes to inflation. Does the Fed have a target when it comes to quantitative tightening, like when it comes to what should be the size of the Fed's balance sheet?
Well, we don't have a specific target, no.
What would you consider to be a healthy size for the Fed's balance sheet?
We define it, not with numbers, but with words. And we want an ample reserves regime with a buffer, so that reserves are not scarce. And we think plentiful reserves, ample reserves is the right place to be. And we'll find that empirically.
Can you put a number on that?
No, I can't really.
For 4 decades, we've had the best of both worlds, low unemployment and low inflation. Can the U.S. economy return to the golden age of low unemployment and low inflation, or are we doomed to live with a new normal of higher interest rates?
A new normal.
Well, I think we have low inflation. We've got a period here of very low unemployment.
We have high inflation, so can we have the best of both worlds?
We certainly can, and that's the plan. Okay. We're going to return to 2% inflation. I'm reasonably confident. Some people argue that we're entering into a world of a lot of upward inflation shocks. That would be a challenging world, but that remains to be seen.
Thank you.
Gentleman from Iowa, Mr. Nunn, is recognized for 5 minutes.
Thank you, Mr. Chair. And thank you, Chairman Powell, for being with us today. Your office has done a very diligent job in working with this body on both sides of the aisle. I chalk some of that up to the fact that you've got some very good folks
Los
from
Angeles
Iowa
says,
on your staff there helping
I
keep
think
the,
gold will still finish to move higher before falling. I will continue with my analysis before I start
Iowa,
selling
the average
hard.
family has experienced, annual
Interesting,
inflation
interesting.
of
Yeah,
about
I'm waiting for price to come to me.
$925 per month.
I'm not going to
just
chase
in the
price
last 3
now.
years. I've got 6 kids. We're the
And his
number one
next
egg
closure on the
producing state
hourly
in
is
country,
in.
but yet
It's going to be
eggs
key.
for each
This
one of my
30 minutes
kids
will be
goes up
interesting
40%
already.
this past year, and take that
This
times
30-minute
6. I'm no
closure is not bad at
economist,
all.
but that adds up real quick, and I think I'm reflective of a lot of families across the country right now. So, Mr. Chair, one of the things I'd like to talk about is, what we are focused on and what your department's working on at the Fed. The U.S. Federal Reserve, in my opinion, should be more focused on folks like my hometown of Bondurant, Iowa, versus what's coming out of unelected bureaucrats in Brussels, Belgium, for example, which is one of the reasons I'm so grateful that you have talked about reopening Basel III for a conversation on what's in the best interest of the American people. I applaud you and your team for this. While I would like to see Basel III candidly scrapped altogether, I think that there are 3 things in this proposal
gold's
that
looking
we've got to
better,
look at immediately. 1, the impact of credit availability, especially to ensure that it won't be tighter credit conditions on small businesses back home in places like Iowa. The ability for farmers across the country to be able to hedge their grain, corn, soybean, livestock in a new Basel III conversation, and ultimately eliminate the downstream effects on American banks being held to higher standards and very clear in Basel III than what's being held in Europe. So with that, I want to readdress your team's attention to the letter I sent in a bipartisan way with Senator Jerry Moran, specifically emphasizing the negative impact of increased bank capital requirements on the economy, our constituents, and ultimately our ag producers across the country. So what I'll first say is, can you confirm that the next Basel III proposal as outlined will address concerns from our ag growers, including our farmers?
Let me just say that we're well aware of the concerns you're raising about hedging, and I'm not going to be too specific about things, but we're quite aware of those concerns.
I certainly hope your team gets the opportunity to hear that, because it's one of the most painful things I'm hearing back in my home district. Would you agree that the end user's concerns
why you're not buying? Great question.
Maybe at the front end of this.
Why I am personally not buying is because of the following. I can show you it. I think it's a very forced buy for myself personally. For me, it will be considered a very forced buy if you get rejected from any of these levels right here, especially the 2383. It's a very, very precise rejection. Of course, you hold above this. I agree. But what I don't like personally, and for me, that's just a rule I cannot cross here. If you close an hourly candle below, right, then you have these 2 beautiful closures here. So let's say it's right here. It's sitting at 23.77. You have these very clean closures above, and the next one breaks below it and closes above it. Below it, sorry. Then I'm really, really careful with trying to look for longs to potentially tap into it and go through it. If it happens, it's great. But there are many instances where I see this flip, and even the last minutes before the hourly closure, it starts flipping bearish, and it starts to roll over. And then out of nowhere, you have the body closure on the 1 hour right there. And then the next candle comes up and it flips bearish to right as the once the hourly candle comes and closes. So it's not always the case, but if we would have closed above here, of course I would have stayed consistent with buys. But for me personally, this would be for me very forced buy, and I would be, I need to be very careful with that, especially if you close in, outside, and inside this particular level here. So yeah. That's the main reason.
If,
So when we took that first sell, it was a completely different story, right? When we took the trade from the initial highs here, okay, back towards the same level here, this was a much easier confirmation. There was nothing really to worry about, to look for a follow through here. And even when it came through it, you just had these beautiful rejection candles there, same as what you have right there as well, which are, in my opinion, hugely beneficial. And that's why it was quite an easy trade, an easy entry Model 1 today. Whereas this now becomes very forced. But that's my opinion.
Congress or, say, a farmer in my district had been included in those opening conversations?
You know, in hindsight, perhaps that's right. But in any case, this is what the comment period is for.
Well, I'll note that 84% of the comments coming from this proposal concern entities outside of banks, as you know. A lot of those were from the ag industry who felt that they had no voice in this and were a recipient of things that really harm their businesses. With that, I want to read quickly, former Treasury Secretary Larry Summers was asked about Basel, and he said, quote, "We're going to need to prepare for consolidation in banking in the future, quite possibly some even further evolution of lending away from banks." Now, I'm going to note here that Iowa has over 250 community banks with assets under $7 billion. His commitment, or his comments are of great concern on this consolidation. Do you share concerns about a consolidation among
Repeated the same structure as yesterday? Yeah, it's very similar.
We all, I speak for myself, you know, I realize
it's kind of that bar play, right?
Tremendously important in
where
the
these hourly candles are just very, very close with each other.
When community banks go out of business, or at the same time, if there needs to be consolidation, I don't think we should be standing in the way of that. But we shouldn't. We don't want to be part of the reason why community banks are going out of business or being forced to merge because of, for example, high fixed costs because of regulation or other things.
I would agree with you, Mr. Chairman. We don't want to be the instigator.
When can I reconsider buys?
Go out and stop serving local.
Let's say we close this hourly candle above.
As we look
above these highs right there. All right, let's say we close them. We close them above the 2377 again. That means that now officially we kind of reclaimed that initial zone. That would give us a much better confirmation, right? If you start looking into this retracement, you start holding here, you start showing some support there, you might create that W formation to look for further continuation up. But at least you have that hourly closure reclaimed above that initial zone. That would be the only way for me to look for buys. But for now, if you want to buy, just wait for this hourly candle to close above the 2377. If you didn't buy yet, right? If you didn't buy yet, at least. So let's just wait simply for that hourly closure there and see how the next hourly candle goes and develops, and then you have your answer. Don publishes, I'm selling now. Lorenzo, CPI prediction. If the CPI comes out lower than expected, then it's going to be very interesting for the dollar. Very interesting for the dollar, because the dollar itself is already holding very tight now. And, you know, if the dollar decides to dump, man, gold will start ripping. The funny thing is, gold has been pushing up beautifully already over the last couple of days. But right now, at the moment, We'll see. We're keeping a close eye on it because we cannot really predict the outcome of the news itself. But we do know if price comes down better than expected, then when market priced, or the market will price itself in, you're gonna see gold ripping. Ripping. Yeah. How much did you make in your last trade? I don't know. Something like $1,000. I don't know exactly. I'll check it later. Thank you for the... or congrats on the 92,000 subscribers. Thank you, G. Thank you, G's. Man, what are we gonna do at the 100? What are we gonna do at the 100K? We need to come up with something. Something sick. Something we haven't done before. Something dope after 2 years of streaming. We need to come up with something. The 100K special now. It has to be something cool. A live boxing stream. Haha. Yeah, now this is also interesting. I do agree with you. If you look here at the rejection place, this could be a rollover play. No problem with that either. But the same thing is going to be here. The hourly closure is going to determine everything. If you close below the 2377 once again, then this was just a liquidity grab, and then it was just a push to the downside potential. Kind of like this. It's kind of like you start doing something like that. Oh, we're definitely gonna do some giveaways, geez, for sure. No, we're gonna for sure do something. We're gonna give something. We're gonna give away something bigger, bigger and better. What would an entry point be for me to buy? I mean, if you close this hourly candle once again above the 2377, then you've reclaimed the throne, right? This is where you initially came from. You reclaimed the throne. You might be pushing back. But again, look at these 3 bars, right? Look at this hourly bar play. I don't know about you guys, but I don't like taking trades in that. In these 3 hourly, 4 hourly bars here. What about you guys? I'm not a big fan of that. I mean, you start looking at entries inside of that 3 bar play. I'm not a big fan of that. I really want to see it, deviating out of it. So it's you know, better to be patient there, because these things are gonna go up and then it comes down, and you're close inside of this bar, and then it comes down, and then it's just not the right range to trade it. Our first trade, that was a simple and effective trade. That was just in and out, done. This is more ranging, more choppy here. We call this a barcode play. So what do you want to see? You want to see it rolling over, right? And then starting to drop further. Unable to break the highs. Done. Aggressive entries are short here and stop loss above here. But if you close this hourly candle above the 2377, my suggestion is to get out. And this is a bigger stop. This is quite a big stop loss, because you have to then put the stops above the highs. At least there. At least at around 2385. Oh, that's okay. That's better than 2287. I agree. So yeah, let's wait 15 minutes for this hourly closure. Yeah, see where we close it, and then I know if I can give you guys this this potential signal for shorts, or if this is invalidated or not. We'll give it a show. Yes, no trades in the zone. I'm holding and buy because I have it in 2350. I have 3 entries and close to. Okay. If you that's beautiful. That's beautiful. Here it says we should take the YOLO trade again. The YOLO trade. Who remembers the YOLO trade? The YOLO trade was pretty random. And it was pretty epic though. It was an epic stream. Because we took a trade because somebody said, oh, you never take a trade. I said, bro, you just missed the trade. But then I said, you know what? Okay, here's your buy or a sell or whatever. I don't even remember. I entered right away. I didn't even look at the chart. And I entered sporadically. And obviously, we lost the trade. We lost that trade. We had a 12 win streak. And I put that random trade on. And we just lost that trade. And then I said, that's what happens when you don't pay attention. And when you're randomly entering the market, random, because you want to be in the trade so much. And boom, we lost the trade. And then I think an hour later, we had the biggest trade of the month. With proper analysis. Lauren says you can show the real, this pure gold moment. Yeah, it's been a while. Let's see if you have it. Is it on YouTube? I don't even remember if it was on YouTube. No, I don't think so. Let me know if you guys can see the... I don't remember. Yo, team, do you guys know that? Is it on YouTube or is it on Instagram? Congratulations.
I do watch quite a few of your streams.
I don't know. Vantage had a great trading session, back 300 pips, ups and down. Congrats, G. Fantastic move, good job. IG, okay. Yeah, that was crazy, huh? I don't know, remember. Was it this one? No, of course not. I think it was this one. Okay, I'll randomly enter right now short, okay? Yeah. New. Take some trades. Okay, I'll randomly enter right now short, okay? Especially for you, here we go. Good luck. And this is exactly the reason why we do what we do. Why we trade LTA. Why we have a system behind what we do here. 1G, 2Gs, 3Gs, I don't care. This is to prove a point. Up and down, buy and sell. This is what happens. This is why we kill our winning streak. To make you a better trader. Congratulations. Worth every single dime. If you get it, press a yes in the chat. Shout out to my OGs. Let's get back to work. Let's do things the right way. Win or lose, this is a real trade. Enter model 1 in a 15 minutes, stop loss below here. But this is the perfect moment to take some profits here. We close 50%, fantastic. Time to throw our stop loss in profit. Final TP until we go to our take profit here. Boom. We officially are profitable after the previous trade, the example trade. I'm confident in what we're doing here. TP hit! This is the proof of point. Thank you very much. That shit was madness. Yeah, baby. Take some trades. Okay, madness. Madness, for sure. Yeah, that's why we don't do things random. That's why we pay attention to what we're doing. And we follow a system. I couldn't work without a system. And then it's like, yeah, you miss out on this. It's a system. It's a system. I cannot have 5 systems running simultaneously. It doesn't work. I cannot do this. I cannot be a trend line trader today. And I cannot be a horizontal support and resistance trader tomorrow. And then in 2 days, I'm going to be trading EMAs. And in 4 days, I'm going to trade only price action. And then I'm going to have one spreadsheet to track what I do with all these different strategies combined. Good luck. So if we close above here, then we reclaimed the 2377. That's a good sign. All right. At least that's better. That's better. It's gonna be good. You really want that here. If you flip this bearish, oh my god, we're gonna dump hard. We're gonna dump hard. If you start flipping this one, you see it on the 2 hour, we're gonna dump hard. So I'm gonna place like potential sell stops below the 2373 and target the 2365 in case you come down here. But if this hourly candle now, let's say, closes above the 2377, then you need to see also again one closure below in case you want to put the sell stops there. That's kind of the idea, is that you want to trade outside of that range, and if you do close above it, then it's great, and in regards to buys, it's fantastic. But what is happening here is that we're kind of rolling over. It's starting to slow down a little bit. So if this is creating a lower high and you create a lower low, then it's pretty evident that potentially these lows could result into a lower high, which could result into a lower low, which could result into a new trade or into a bigger trade at first, targeting the lows aggressively. But that could be the start of what we call a lower time frame kind of parallel move here, where we start to just continue to drive further down until we break below and we kind of aggressively push down here. So therefore, that will be the scenario where I would say, okay, sell stops below the 2373 in case you come down, and you say, yeah, it will not come down there. You never know, man. You never know. You never know. We have been building up a lot of shit now for a long period of time here today. Okay? And if you are unable to reclaim this high and re-break it, then at some point it has to come down lower to grab the liquidity to look for new potential upside potential. So if you hold above, fantastic. Then and you have an hourly closure above here, then this might still flip into support, right? And then this is still maybe a potential scenario where you could come up and test the 2381, the 2386, where we initially came from. But if the hourly closure starts to come down in the 2 hour, especially here, right, at some point will flip, and we have seen it so many times, then it's an easy short. A 2 hour flip here with a break of the lows is an easy short. Okay, so it all depends on this closure now in the short term. This next 2 hour candle closes in 1 hour. If that flips, it's still a short for me. On the lower time, you could say, okay, hourly closed above here, reclaimed the throne internally. Then this is kind of a potential play that you could look for. But, you know, always be cautious when we are unable to break highs. Unable to re-break highs here. Maria Diaz says Lorenzo is mentoring me long-term traders, people, no room for the weak and lack of discipline. I like it. I like it. I like it. Cyrus says gold looks so bearish right now. And the thing is, it doesn't really look bearish, in my opinion. But it will be if it goes there. If it goes there, it will be. And it will definitely be bearish. And it could definitely lead to continuation. So that's kind of what we're looking for. You're now having this overall trend, which is great. And if you close this hourly candle, there is still potential, you know, to enter long. Stop loss below the lows, targeting the highs, right? TP at the 2381. So that's one layer. But if you start breaking down, I think we're going to just smash it. We're going to smash it. Let's see. Voice says, I use the LTA strategy to hold the trade, getting to 500 pips. I mean, we've been there before. We've been there before. How many years of experience do you have? I started in 2017. So that's now 7 years. As I'll pay on Bitcoin, buy every week and forget about it. Now, honestly, I don't know. There's so many layers now to talk about in regards to Bitcoin. We're getting rejected here. We had the monthly resistance. Okay, this is the monthly. This is now monthly resistance. You can see on the weekly you're getting rejected from it. So if you're unable to close below it, and you start re-breaking these lows here, I think we can dump further. I don't see a reason why we couldn't go back all the way to the 40K. If that's the case, there is so much liquidity below the $50,000. It's absolutely insane. So they take that, they come back, and they look for a potential continuation. And if the monthly candle decides to flip bullish, it's game over. We're gonna go to all-time highs. So I'm really trying to understand the macros here. So it's kind of like an entry model 4 on Bitcoin on the weekly time frame. If you know what I mean. Or an entry model 1, sorry, short. But if the monthly candle flips bullish, yeah, man, it's over. It's fantastic. You have an all-time high potential. But it's still far away. So we don't know. And I think that's the only way to look at Bitcoin now. Is to really zoom out. And not start going into the 1 hour time frame. Start figuring out what Bitcoin is doing. Like the same way we're doing it with gold is doing. Because Bitcoin, nobody has any idea right now about what's happening. And what's gonna happen. For now, we're breaking below. We're retested the monthly resistance. We're getting rejected from it. I mean, this could be a nice short to continue to drive further down. But, you know, the weekly can help a lot. Kante says English versus the Netherlands semi-finals today. May the best team win. Damn, yeah, almost forgot I'm a Dutch guy. That's so true. That's today, my G's. That is today. Yeah. There we go. The Netherlands, Spain. That's gonna be it. The Netherlands, Spain. Easy, right? People underestimate the Netherlands, man. People underestimate them. Every single time. The Netherlands. And every time we get to the semi-finals or the finals or whatever, and they're like, oh shit. Let's do a poll real quick. For my football guys here. I'm to be honest, I'm not a big football guy. I'm more of a, you know, occasional football guy when it comes out, when it's in my favor. I'm one of these guys, okay? The Netherlands national team. I would love to do that. But I'm curious to your opinion here, based upon my bets. Gonna probably do a bet. That would be nice. Let's see what we do. Kind of like your risk to reward setup, right? Your high probability setup. Penalties. All right, let me know, G's. Let me know how low you guys are. No, I'm joking. I can guarantee you the Netherlands are underdogs. Let's see. Yeah, that's what I thought. 54% England. Okay. Oh, we're gonna find out, geez. We're gonna find out today. Okay, so back to trading. Hourly candle has closed above here for now. I'm not in favor for buys now. In this range here. If you do roll over, I'm all in for sells. If you do close above here, let's say maybe you create a. The only way you could look for buys is if you pull back. You find an entry model around this zone with some wicks, right? You create these two bottom wicks. You start coming up, boom, stop loss below the lows. You target the highs. It's the only thing I would look for. If you reclaim the lows, I would still be looking for the same old short setup from there. So a stop loss below, or we start to roll over, we're forming that trend, we roll over, and we start breaking down. Okay. On the 1 minute, we have been ranging, so we're gonna potentially soon break out, and you're gonna get your climax here. But I do believe we're gonna, we're just having some resistance now. We're building a tier, as well as we're building a tier. We're gonna break out soon. That's practically what we're gonna see. Okay. So up to you to decide. I'm looking for sells below the 2073. Later on, maybe. Doesn't have to be now. Can also be later. And yeah, in order to do that, I mean, the 2 hour can still flip. I would not be surprised. We have seen the rejections here aggressively before. So yeah, we're gonna find out. If price continues to drive up, eventually the Sunday open will be, in my opinion, somewhat of a target. But I much rather see price coming down to looking for continuation buys up a little bit lower, and not from here. So I want to see price pushing down slightly more to then look for continuation buys again. So we'll see where it is. Okay. G only make 28 pips in the whole week. I mean, this is the second stream of the week. So yeah, we have the second stream. We made this trade today. I mean, it's better than 6 pips or 5 pips or 4 pips or 8 pips. Money is money, G. I don't know, how much money did you make today? Cash. Let me know. All right. And do you trade London? Yes or no? All these things come along here. What's your opinion on the Elliott waves on trading? Elliott waves. I'm gonna be honest with you. I'm not really familiar with the Elliott waves. I'm not really familiar with the 1, the 2, the like 3, 4, and then the 5. I'm not really familiar with it. So you tell me. I'm not really familiar with the Elliott wave theory in general. I've never studied it that deep. I've heard about it, of course, a lot. But besides like the Wyckoff theories and stuff, I'm much more deeper into that than into the Elliott wave theories. Guys, do you believe every strategy works? They just work at different times? Yes. I believe so. I believe that every strategy is moving around. I see that, you know, every strategy has its moments when it's killing it, and every strategy has its moments when it's not as effective. And that's why you never judge a book by its cover. And that's why we always wait for price to get back into the bigger picture. So we zoom out and we look at it this way. Okay? Every strategy you need to zoom out. Okay? But the thing is, in this game, especially in the streaming game, right? One time, let's say 8 o'clock, New York session, one pair. Of course, you're not gonna always have winning streaks. That's impossible. Okay? Especially because we're always coming upstream on a fixed time. One pair, one strategy. Of course not. That's not how the game works, right? But the game works like this. You're as good as your last trade. That's how people view you. You're as good as your last trade. In this scene, and it's a pretty famous saying, right? You're as good as your last trade. The reality is, you need to zoom out. You need to look at the bigger picture. You need to look long term. That's it. But overall, congratulations for the wins. Okay. I think it was a clean trade today. I think it was a clean trade. I think we got in, we got out, we made our money. I think it was a good trade today, fam. Why should I trust volume as an indicator when it's easily manipulated? So how do you know it's easy manipulated? Because it's actually not easy manipulated. Volume is one of the hardest things to manipulate. In order to manipulate volume, you know how many orders, how many participants you need to contribute to the trading volume to manipulate it? It's extremely hard to manipulate volume. Why? Because there is so much volume, right? And when there are so many contracts executed at a certain moment, it's so hard to break. I think what you're referring to is something, this is called spoofing, right? So guys placing many big orders in the market and then they remove these orders later on, okay? So it's very hard to manipulate volume. Don't get confused, volume confused with just liquidity hunts, let's say, okay? I check out the trader set from time to time. We have fun there. Yeah, cool. Do it. I love the trader chat. I love to read the trader chat. I'm enjoying it as well. Yeah, shout out to 10 pips straight. Nice. Cool. Lorenzo, are you thinking about trading US30 on stream as well? It all depends what the community wants to see. Because you know what I've been trying to go back into gold. I've been trying to go back into other pairs as well. And then every time when I go into other pairs, then people say, what about gold? What about gold? What about gold? The moment I leave the gold chart for 1 second, it's all over the place. It's gold all over the place again. So it really depends what the community wants to see. I like gold. I like gold. I like to look at gold. I like to trade gold. I'm enjoying it. But yeah, if the community wants like a Nasdaq or something like that, I will be cool with that as well. Alright, cool guys. I don't think price is gonna come back down here for now. Alright, so I'm gonna keep this one in the loop. Sells below if you close here. That's it. Looking for that continuation towards the 20-65. If you do come over and roll over down, we have a very hard time breaking the highs. We did close back above the 23.77. So I think this by itself is just a small range now to take consideration. And at some point we're gonna make a move, and I would not be surprised if this is just gonna be potentially somewhat of a, you know, push down before looking for continuations up again. I would not be surprised if we see something like this, where we start to roll over, we then break further, and we continue to drive towards the Sunday open again, eventually. Okay? That's it. But maybe at some point, yes, guys, we can start thinking about trading Nasdaq or something like that to use 30. Might be a good idea. Okay? All right. Dominic says, thanks, G. Have to see you tomorrow. Winning day. Congrats to all. Appreciate it, bro. I'll see you tomorrow, guys. Okay? I'll see you tomorrow with the CPI. Damn, it's a CPI day already. Yeah, it's gonna be madness. As always, CPI is always gonna be madness. I hope you're prepared for it. And if not, then look at some reels. Look at some previous reels that we've done before. And it was pretty nasty. We've been through some shit. Okay? We've been through some cool stuff as well. That was pretty bad. Here, I'm gonna place a trade. It's gonna be limit order. I know which one it was. Now let me show you something. Let me know if you guys can see the boom. We're in the this one. And Lorenzo, I passed my. Oh wait, sorry. This is what I'm gonna do. Congratulations. That's how. Yeah, we have so many. Is it too late to learn how? Risk-free, take some profit. I don't know, guys. Anyways, there is a CPI trade. We might see something similar tomorrow. Who knows? Because we're still back into the range. And if we are back into the range, it's gonna get very, very interesting. Okay? Especially when we have broken the Sunday open. And we come back to the Sunday open when the CPI comes. If that's the case, Man, it's gonna be absolutely crazy. It's gonna be absolutely crazy. So yeah, man. Keep it up, fam. Do your thing. Congrats on the win. And I'm gonna see you tomorrow, yeah? Thank you guys so much. Appreciate the support with football. Not a big football guy, but anyways. Let's see how it goes, alright? Let's see if we can make something happen. Win a European title or something like that, finally. That would be nice, right? I think we deserve it now. Cool. Cool, guys. Okay, take care. Take care. Jeff, Arthur, Mickey, Beast, shout out to you. CPI, baby. Ciao, ciao.